Good morning, everybody. Hope everyone's doing well. Let me test something real quick. Can y'all tell me if you hear me okay? Hope you guys hear me okay. Yo, what's up, Nelson? I don't speak Spanish. I hope you can understand English, though, brother. I wish I had like an AI that could. Maybe I'll have it eventually to somehow translate my videos. Or I don't know how they do that. Because I think reaching other countries and people that speak different languages is a good thing. Maybe I'll have to figure that out. But yeah, again, hope everyone's doing well. What's up, Fotis? One of my good friends. Amazing individual. Always happy to see you and hear you. Or talk to you. Yeah, I see some videos on YouTube where people have that somehow, but I guess that's something I'll have to figure out later, huh? Alright, let me check something real quick. Okay, you can hear that. All right, we have news in a little bit, like 13 minutes. So we will have to see what happens. By the way, I want to shout something out. For years at this point, my crypto mentor, the things that I've learned in crypto, come from this group called the Warrior Academy. Okay, so these people, I cannot stress to you enough that it's very important to have a good mentor for anything about investing. But crypto wise, because of those people, man, I mean, it's just insane how correct they've been. You know, I've been invested in certain things like XRP and some of the more controversial coins and technologies for like 7 years now, maybe a little longer. I remember when I was in Bitcoin when it was like $500. And I was stupid, right? It ran up. I didn't know anything about investing, but I was involved. It ran up like a decent amount, like doubled. So I had like 1,000, 2,000. And I was like, oh, cool. You know, and my lack of knowledge about money had me get out, right? So I should have held it. Just the one that I had. At one point, I had like 4 Bitcoins. And I ended up just dumping them off because I wanted the, couple $1,000 gain. Which, of course, now that I look at it, it's a like idiotic thing that I did. But luckily, because of people like what I just showed you, the Warrior Academy and Coach JV, that's one of the founder's name. It's just incredible. I'll let you go do your own research on it. But if you want a good crypto education platform or group to listen to, that's the one group that I've listened to for the last 3-4 years, and I cannot give them enough credit because they are absolutely amazing. Things have just done exactly what they've said it was going to do. Same as ICT, right? Same as kind of like what we're doing here for these charts, right? We assume things are going to take place and they just magically take place, right? Well, for crypto, those people are definitely worth your time. All right. So yeah. So when it comes to what we're looking at here, again, we have news in a little bit. So let me see how much news we got. Okay, so we got two. We have one in 10 minutes, and then we have one at 7 o'clock, basically an hour and a half. So we're going to want to see what happens, okay? We do see that we are retracing into this fair value gap here on the yields, right? For this weekly chart, it's pulling down. We're basically rejecting this, right? So that has triggered in a response to the downside. The only way that I'm going to turn this off from looking to go higher is if price was to break down below the level down here. If we stay below this and it starts pushing like deeper and deeper, closing below the middle portion of these down candles, which is a order block. Okay, so if it closes below there, then that may trigger in the response to want to target the low down here or dig deeper into this order block. Definitely if we break down below this low, we're breaking through an order block, breaking through a weekly fair value gap, swing low, right? So there would be no real reason for us to want to see that go higher if we break down below these levels. So yeah, but if this holds up and continues going higher, we should be able to see DXY simply just use this as a retracement to then go higher. We'll see if that takes place. For now, this just simply looks like a retracement to this order block. You go from this high to that low, looks like a retracement to a premium, and we're also respecting, on a closing basis, the middle portion of the wick. So depending on what the response is going to be from here, it's going to be pretty impactful in terms of what's going to take place moving forward. We do have a rate announcement coming on the 30th, so we got to keep our eyes out for that, because that's going to have shock waves if there's a dramatic change. But, you know, for the time being, we want to watch what this is going to do from this fair value gap. Right, it's going to use it as support, displace, and go higher. Because if that's the case, we may have a type 2 dealing range setting up here, which is generally a reversal. And then if this fails and gets above this high, that turns off any interest to want to go lower for the DXY. Okay, and then we would pretty much position to go higher. That would then trigger in a response for these to drop, the currencies to drop, which they kind of have already been doing. We'll see, you know, if that happens on the DXY, that'll, again, probably send shockwaves through this to continue pushing lower. You can see there's a lot of stuff in here. Let me actually clean this up a little bit. We'll keep the 4-hour inversion, the monthly order block. We got the quarterly or monthly fair value gap, quarterly bullish order block, and we got relative equal lows down here. The sell side looks pretty available. So again, we want to see how price is going to react off this. Is this just a retracement to then blow out the lows again? If DXY is going to rally and hold this area, like I said, if it positively responds from the lows down here and the weekly fair value gap in here to the buy side, then again, that's going to support this being just a retracement. If we break outside of this breaker candle area, though, it's probably not going to want to go lower until it, you know, does another strong displacement and then maybe sees DXY go higher. Right, so we're going to want to just keep watching this. This simply looks like a retracement here for the euro. So, you know, it's more extended and excited to reach for sell side in the pound futures. Okay, or just like GBP, USD, whatever. So again, we want to see what happens here. It's the end of the month, so your expectation shouldn't be too exaggerated. We've had a lot of movement. Go back to the start of June, well, start of July, actually. We could see what the month has done. The month has basically ran up a little bit, manipulation, and then declined. So the month has been bearish. Who knows if this is going to want to close inside the range. It's a summer month, so we could see that. I'd prefer, you know, to see price prove whatever it wants to do. But if we look at the weekly chart, again, this just looks like a mess. Okay, so we want to see if this overall structure is going to continue to hold and go higher. if we were to break down below this low, again, that puts us in a pretty strong interest to want to target the sell side. And then that may be triggering the quarterly shift from bullish to bearish taking place. But again, we're not going to assume that. We need more evidence for that. So for now, we want to see what this is going to do in here relative to, are we going to just give this as a retracement and displace higher with a bearish DXY? Or is DXY going to turn around and go higher and then support this breaking down? We do have an SMT at the highs here if you take a close look. All right, so the retracement in there has a completed swing here with a failure swing in here. So if we start to displace lower and DXY goes higher, then we know we can get in line with the lower delivery. And then if that stuff takes place, that should be able to translate to the indices as well. Let me pull that up. Got that. All right. So yeah, then that should potentially translate to this. We do have a pretty strong response off the high, off this run to the buy side. There's still failure swings happening with the Dow, so there's still a cracking correlation. So I talked about that yesterday with my private group. I talked about what the possibilities are on Sunday, right? If we do break down below this fair value gap and close below it, my attention would go to the wick down here and these previous lows. Right, so previous day's low there, Friday's low. So yeah, if it breaks down below this fair value gap and starts trading through this 4-hour order block plus this daily order block range, and it just starts pushing through, Friday's low would then be looked at as a target. Friday's high would have been used as the opposing liquidity to position opposing liquidity to then target, like I said, the Friday's low for a retracement, which we also have this too, the daily wick. So we're going to keep that in mind as well if price does want to break down. But for now, we're going to submit to the fact that we're still not overwhelmingly bearish yet. There is the COT analysis I've talked about with basically showing us there's a potential for offloading of buy positions. Again, COT is a lagging indicator. It may take some time to be able to give us that response. So yeah, we'll have to see what that translates into. And yeah, so that's kind of the landscape. If you think of power of 3, here, let's go to this chart, move down. We could see, wait a minute. I don't know why I took one of my indicators off. Yeah, so if we pull that up, right, this indicator down here, we could see that this is a London's session. So London's low has been set here. It's been a pretty nice movement higher. So again, we're going to want to watch what that's going to do. I'm going to preferably wait till the 550 macro to consider things. I'm not going to take a pretty aggressive execution prior to the at least the first macro coming in after the news comes out. What news event is it exactly? Oh yeah, it's a Fed speech. So yeah, we're absolutely not going to push the issue through Powell speaking. There's going to be something very dynamic here. So we're going to have to just wait and see what it does. But again, we have a potential argument for this to be a retracement to go higher. Depending on what the response is going to be off the news, it's either going to do that or it's going to end up breaking down and then possibly looking to seek some of these relative equal lows down here for a retracement. Let me get that SMT out of here. Again, there is SMT still though, right? So we're going to see if we could get out of this mess for the Dow, and we'll see what happens here. Is it's just going to continue and we'll catch a continuation to the buy side, or are we going to start seeing signs that price may want to look to come and clean up some of this sell side liquidity? Right. For now, though, the interest is still bullish. Narrative is still bullish until proven otherwise. What proves us otherwise? These levels here getting broken down through and then closing below. And then in that case, we could then look to maybe target something like this. So yeah, hopefully that makes sense. So now we go to the lower time frame. Let's get a feel for what price is going to do in here. We do got relative equal highs up here, so we'll keep that in mind if price does look to trade through this stuff. If this high does end up becoming the target, this consolidation, accumulation, reaccumulation may result in a smart money reversal from this 4-hour inversion. I believe it's a 4-hour. 8-hour. So 8-hour inversion may end up resulting in the smart money reversal if we do end up favoring buy side. From this low down here up to the high, if we measure that out, all this here with the delivery going lower here, delivery trading back into it, it should be able to act as a balanced price range. We could simply just use this until we break through the buy side. So this should act as a balanced price range. We should be able to stay above that. This is an order block. Order blocks and breakers and other PD arrays are balanced price ranges under the hood, which is why they support the middle portions for the most part. And then when those middle portions are violated, that means the PD array / balanced price range is being violated. So as a result, price turns around. And that's why these things are so important to understand. You can quickly see how that can be important when you're watching order flow to try to gauge like what it's more likely to do versus what it's not going to do. All right. Good morning, Michael, and everyone that's hopped on. Again, I appreciate y'all giving me your time, and hopefully you learned something new or reinforce something today. And hopefully the market can offer us something clean to participate in or consider participating in. All right, so if we just scroll around, go to the DXY. Again, we're kind of just hovering around this area. We're still in a range. So again, we'll watch this fair value gap, see how that behaves. We do got relative equal lows, but we also kind of purged out this low slightly. So that's kind of interesting. And then again, we have up until this weekly fair value gap. We could just get one more delivery lower, and then maybe that's going to be used to trigger this weekly chart to then start to send price higher, basically creating this down delivery for the week to then create the weekly low within this weekly PD array below the previous week's low where liquidity resides. So then they compare that with the buy orders that they're trying to participate in potentially if we start to see price displace. Right, so that's kind of like how you would break down this logic with what we've seen. Mind you, this has been very quick. I mentioned yesterday, I believe, with my private group that when price is quickly moving, like right at the open of the week, like if it's just racing towards a particular level for the weekly delivery, generally price is going to turn around in some capacity. So you don't want to chase that type of stuff. It's the same with the daily delivery, right? If we open up and price just quickly runs for London towards a particular PD array going into the New York session, that'll generally lead to a reversal taking place going into New York. So the same phenomenon happens here on a weekly basis when price opens up for the week and just quickly runs to a level in a hurry with little to no issues, right? In this case, there's potentially an argument for that level being the weekly fair value gap, and the low here, which you could see has been attacked. Let me see if I have this accurately. Yeah, so it just slightly missed it, but we do have this fair value gap, so I guess it tapped into a fair value gap there. This portion here being overlapped by that creates a balanced price range. So if we're going to continue going higher and not go lower, it's going to have to stay above the middle portion of this weekly fair value gap. If it was to displace and break that middle portion, the DXY will in fact look to target the lows, potentially the wick, so on and so forth. Okay? So yeah. So I hope that makes sense. Okay. Oh. What happened to my... Oh God. Can y'all see me? I can't see myself now. I don't know what just happened. Wait a minute. What just happened? Oh, there we go. What just happened? Give me 1 second. That was strange. What just happened? It just like took me away. Like the whole box disappeared. All right, that was weird. I'll figure it out later. Hopefully that doesn't happen again. All right, so what was I saying? So yeah, when price is quickly moving towards a level, you could reasonably anticipate that it may look to be getting there in a hurry to then turn around and give a strong pull against that, and then either continue or just completely reverse entirely. In this case, it'd be pretty nice to see it reverse entirely. But again, we can't demand that, right? The only way that we classify this weekly perspective as a complete break in market structure is if we get this high to be violated. Because this would also set up something called a type 2 dealing range. I've mentioned it before. I'm not going to go into too deep of detail here today about that. I talk about it pretty, at great lengths in my private group. We talk about it from higher time frame to lower time frame. It's just essentially reversal like framework and just the way price looks when it's going to reverse. Most of the time at a PD array. And then, of course, if it violates or breaks above that, all that price delivery becomes balanced. So, or it's just like a variation of balanced price ranges, right? So we've talked about a lot of them recently, so hopefully you guys have taken notes. Again, that's a topic that I talk about regularly, especially in my private group. So you're welcome. Okay. And hopefully you guys use it because it's very helpful. And there's great lengths that we could take it even further than what we've already talked about. But yeah, so hopefully what I've mentioned so far makes sense in terms of what we're watching here. We have this fair value gap. Okay, let me actually... I'll keep it. I'll keep that on there. But yeah, so all this work has been done inside this quarterly fair value gap. Okay, so we're going to continue to watch what this is going to behave like, right? Like we're trading into the middle portion pretty much of the weekly or the quarterly fair value gap. Make it a little bit bigger. Okay, so we'll see if it's going to fail to even get there and then just use this as a displacement. If we do use that as a displacement and we get above this fair value gap, we're going to want price to stay above that, and if it continues to stay above that, that would then be a catalyst for us to see these things continue to drop. Of course, depending on how aggressive it ends up behaving. There hasn't really been like much of a response, which is kind of strange, off this news that we've just seen take place. So that's a bit concerning when there's two news events. If one news event takes place, the early one takes place, and then it doesn't really do much. But then there's a secondary news event that comes later. A lot of times it's gonna use the first news event as a fake lagged response. And then even if the secondary news event, like we see here, even if the secondary news event is not a high high impact news event, even if it's a yellow folder, a lot of times that will become, when price is going to move, right? It'll use that time to move price. All right, so yeah. Hopefully that makes sense. I just noticed that something is going on with with my broker, of course. All right, we'll keep the chart up real quick. Have to see what the hell is going on here. Do you guys have any questions? Hey, what's up, Supreme? Welcome back. That is very strange. Does anybody have a Top Step Funded account? Let me know in the chat. I need to see something. Yes, Supreme, if you've noticed from pretty much every live call that I do, I talk about this thing I call liquidity mapping. I have a list of liquidity pools that I set as a framework for all my students, free and paid. And it's very, very reliable. London High, London's Low are very much part of that equation. Sometimes it's used as a target. Sometimes it's used. It uses both of them. One for opposing liquidity, and then it targets the other side of London. And then, of course, that can also be in the context of targeting previous day's highs and lows too. Those are 4 of my favorite liquidity pools I use on a daily basis. And, of course, there's a larger list. But those, in a nutshell, are, for me, the most important, depending on where price is at. But, yeah, I absolutely target London's High, London's Low. And just because we didn't touch a new day opening gap from the 17th it shouldn't make you question your bias. That's one PD array that hasn't been attacked. There is a multitude of things that changes your bias and narrative or makes you support your bias or narrative. Okay, and it has to do mostly with the higher time frame. And 3 PD arrays have to be violated for me personally to question the overall narrative or where price is headed. The start before 6:30 or the New York Open AM session is generally the manipulation phase of the daily range. So you also want to keep tabs on that as well. And yeah, unless something changes in that regard, like 3 PD arrays being violated, like us basically breaking down through this fair value gap and then breaking down below the low and these down candles, which is, I believe, an order block. Yeah. So unless that's violated, right down below this low, because there's 1, 2, 3 PD arrays, and then of course we got this fair value gap, and then we got the daily wick. So if it was to break down below those areas with strength, basically violating this high to that low too, which I've classified as a BPR because the order block and breakers are balanced price ranges. If it was to break these levels, then of course my attention would then go down to us potentially targeting the sell side over here. Okay. So yeah, hopefully that is clear. What I just mentioned there in terms of validation and validation, that's a universal thing, and it's something that is hopefully easy to understand, and it helps you calibrate and stay behind a particular narrative so you don't question as much. You're still going to question things at times, especially when you're learning, but this type of tactic, at least for the last almost 7 straight months, with me going live on YouTube, I hope that it's been showing effective, and basically, showing you how consistent it could be and how it allows you to hold on to your narrative on the higher time frame, even through the shaky stuff that may take place on the lower time frame, because higher time frame's king, and unless the specific validation levels are violated, I will stick to the narrative. And a good example of that is the DXY, right? This movement here, when it rallied up like this, there was so many people saying, okay, the dollar's bottomed out, I watched so many people say that publicly, and I was not saying that. I said this fair value gap, the wick, and then the high up here or the order block has to be completely traded through in order for me to be bullish for the DXY. And so while it was retracing, once it displaced, it proved that I was correct. And we were not taking any dramatic shorts in here. If you go back and look at some of the replays back in May, because I was live talking about this back then as well, you could see how we continued to hold on to the bearish narrative. And then, of course, there was a monthly breaker that also held price. Yeah, that was a good testament to what I've just basically laid out for you in terms of how to validate and invalidate, and why you shouldn't question just because like a new day opening gap is disregarded. We are in a position where, like I've been mentioning the last couple of weeks, where we may look to see price break down, right? DXY may rally, right? The yields are still bullish. Okay, if we go to the yields, right, they have declined, right? But if you go up in time frame, things become a whole lot more clear, right? It still looks like it's just retracing for a minute. So in order for us to be bearish on this overall asset, which then would result in bearish DXY and then further bullish indices, it's going to have to break down below this, right? There's still somewhat of a correlation issue, but it seems like one of my students recently said that it seems like we may be getting back in line with stuff. In terms of correlation, we're going to have to see. We're in the summer months, so you can expect that it's going to be more difficult. Like I said, when August was rolling in, or July, no, when the start of June came in to the third quarter as we were rolling into the summer months, right? So expect things to be a little bit disjointed, okay? Be confident in what you're doing, right? But just make sure that your risk is basically compensating for the issues that could arise in terms of clarity with the market, okay? I just want to also remind everybody, if you do get value from the content, don't forget to like the video and subscribe to the channel. It does a lot for the channel, and it also helps me reach more people. Your guys' support is greatly appreciated, so thank you in advance. Yeah. So hopefully this makes sense. We're pretty much watching what this is going to do. Technically, we're inside of a pretty large range. So, I mean, it's been like that for a while. So we've been kind of putting the bonds and yields to the side a bit, just working off intraday volatility. With this having this decline here, it should be able to push this in a continued bearish move. Okay, and it looks like our 3 PD arrays, at least for the moment, are staying intact. So we're going to still remain on the side of this going lower, similar to how we were over here. And, if this continues to go lower, then we will see this rebound and continue to go higher and just use this as a stop hunt. Okay, so and that's, again, further supportive of not only these going higher and just using this as a retracement, using this decline as a market maker buy model for the euro. Maybe even we could see this as a market maker buy model too. We haven't really done much below the low over here, which would turn into a breaker, I believe, on the weekly, but also more clearly here on the 2-day chart. So it's going to have to, break down and see DXY go higher if that's going to work out in something reliable. Okay. But yeah, if this does continue to go lower and we do see this react from here, again, the line in the sand for bullishness to stop is if price displaces below this inversion. I have two. Whoops. And then, of course, the line in the sand overall, at least for the 8-hour, which could give us a earlier signal for the higher time frame daily and weekly to be bearish, would have to see this get violated, right? So if we do displace above and stay above the inversion fair value gap, there's no need for us to try to pick a top, because taking a short in here is picking a top. There is SMT, there is an argument that may unfold for price to be trustworthy to the downside, but we're not there yet. Okay, so until we get to that point, we have to still continue to trust that these levels will hold until proven otherwise. Narrative doesn't change overall on a day-to-day basis. Bias does. There could be a bearish retracement in a bullish trend overall, or narrative. Okay, so we've been in a bearish movement within this continued bullish delivery. but we've been seeing some signs that may change, given the fact that we've had a pretty strong rally here in the DXY. But again, our invalidation levels haven't been violated. So again, we have to submit to the fact that higher time frame wise, nothing has changed. We're still bearish DXY, still bullish indices, right? We do have the SMT to watch, and then also with the currencies, we have had a pretty strong decline. But again, if you look at the higher time frame, like you move up a bit, it just looks like a sloppy, messy retracement. Let me clean that up a little bit. And nothing has really changed. If we look at the weekly chart, again, we're going to need some significant displacement below this low, breaking through this fair value gap. And then we want to show respect to this up candle as a bearish order block. If only when it does that, I will look to adjust from a large time frame bullishness to transitioning to bearishness. Plus, we would like to see DXY go to the buy side if that is going to be something supported. Okay, so I hope that makes sense. I hope that's not too complex for you guys. And we also have the quarterly bullish order block here, like I have highlighted. Okay, and then not only that, we also have a bullish breaker using these up candles. Okay, so it's simply just returning down to those levels on the higher time frame. And again, we do have the breaker. Got equal highs up here. That's what this buy side is. Previous week's high. So if there is something that proves that it wants to go higher, we will, we'll be able to get in line with that. All right, so yeah. Hope you guys are able to follow along. Do you guys have any questions? We're getting closer to, or we're in the 550 macro now. So because the news took place, let's go see if there's anything that can be worked on within that. Damn, okay, now Top Step let me log in. What a weird glitch that was. It wasn't letting me get in. It reminded me of freaking the FTMO shit where they took all my profit and closed my account. I was starting to get a little anxious. Maybe that was exaggerated, but yeah, once you get done wrong by funded accounts, you're very hesitant to even want a funded account because they could easily just strip it away from you. And we work so hard as traders. They put so many unnecessary, like, over-the-top rules, and we still, try to navigate within it, which, again, I've proven is doable, obviously. Many have. But, for them to do people dirty, I mean, it's just brutal. That's why you got to be smart. So you got to use the funded accounts to fund a personal account. Put money away. When you make money, take it out. Don't try to expand it. Just try to make money, pull it out, and then think about the future, targeting a real funded account that you fund personally so you can make the rules and nobody could take your account away, But yeah, so yeah, again, do you guys have any questions? We're inside the macro, so we're going to keep tabs on that. We have consolidation in here. If we see bullishness take place for a bullish power 3, again, we have 1, 2, 3 standard deviations using the central bank dealers range. And then we got the flout too as a further reference, right? We could see that the low has pretty much been priced in there. So again, we're going to need a pretty decent amount of sell side engagement for us to try to change our narrative to bearish. So again, we're going to be favoring bullishness. We also did a lot of work below the open price. We've got the low that formed yesterday that then accelerated, basically for now setting the current weekly low, or well, just like a manipulation. The current weekly low is down here. So again, nothing's changed. Like I said, narrative doesn't change, bias sometimes does. Sometimes it retraces, and you got to be able to navigate that. Okay, so again, the line in the sand is us breaking down below these levels. Otherwise, I'm going to continue to want to push this to the buy side. What I can say here as well, this delivery in there, okay, We may be able to use this as a bullish breaker, pretty large range for the bullish breaker, but nonetheless, the characteristics are there. So if it gets above that, we have that to watch. Okay, this looks a little more clean. Okay, so this is bullish breaker. So if price gets above that, we can use that as context to frame a setup to go higher. And as long as it stays above this, once it gets above it and stays above the middle portion, we'll continue to want to push price higher. We have some levels up here to target. I think this is a previous day's high. Or no. It's like Asia's high, right inside the flout in the central bank dealers range. So that's a near-term liquidity pool to watch for buys. Okay, and again, if we do have to adjust to drop because there is that underlying possibility for us to start seeing something favor the sell side, we'll be able to adjust. Because that's the luxury we get with the process we employ and the things that we talk about. But for now, it simply looks like this was a run on stops. Okay. Stop rate below these equal lows for London. Set London's low. This is London's high up here. So again, we may have a very similar scenario to yesterday when it swept London's low here and then targeted London's high here with that big displacement. So again, we have a very similar phenomenon, and we also have the power of 3 framework, open price, consolidation, manipulation below, taking out a low over here, right? Then we tried one more time, and now we've displaced with London's high available for us to target. Okay, so if we get above that, again, if we retrace into this, and then we could set up the YouTube model somewhere in here using this higher time frame PD array as our like starting point, right, or level of response or reaction, we could then look to try to find the YouTube model to target these further upside objectives, relative equal highs, and then we have like a gap up here. If we go to the 1 hour, there's like a little bit of the gap that's available. Something to watch though as well, if we trade up to this point, and well, we do have this wick that overlaps most of the fair value gap. That's why when this retraced, it had a failure to get through it, right, and it left it open. That's because there was already work done here to the sell side and buy side, and then later it was overlapped by an imbalance. So when price retraced, it doesn't have to fill in the rest of it. Most of the time, it'll stop right in the middle. And what did this create? This created an institutional order flow entry draw opportunity because the middle portion was respected and the upper portion was left. And that's based on the fact that work was done here, overlapped it, and then price was reaching down for PD array of some kind. In this case, it was the fair value gap. Okay, so hopefully that makes sense. Kind of tells you one reason of the one reason on the list of reasons that fair value gaps get left open. The overlapping of a large wick and a fair value gap displacing through it entirely, so that when it returns back, it creates a potential balanced price range. Okay, so again, if we get a displacement up here, maybe it takes this out, but it can't break above this, and then we start breaking down from there. Those are more reasons to start considering that we may be in a transitional period to then look to target sell side. But again, things still don't overall change until our higher time frame levels are met and violated, right? That being, the levels I mentioned earlier. Okay, so again, I hope that makes sense. That's a very high level of information I just gave to you guys. Maybe it went over your head. Hopefully it didn't. But it's, if you think about this stuff later on as you get more experience or spend time with me more, you'll start to see that this stuff is unrivaled and works out more than it doesn't. It helps you navigate price and get clarity, which again is the objective for me on YouTube. All right, so we have this large wick here too. So similar to what I just mentioned about this, if price does another movement through that, again, a breaker, order block, overlapping fair value gaps, and when a large wick is like an up wick is overlapped by a buy side displacement and it returns into it, that should also be able to create a pretty reliable support level in this case to then continue going higher. Narrative wise, nothing's changed, so we're still favoring buy side like I mentioned. So that's what we're going to be anticipating until proven otherwise. All right, so good morning, Nutty Fafa, my brother. Joan, welcome. Just looks like some of my private group students are on. Welcome as always. Freaking love y'all. Y'all are amazing. So yeah, like we talked about yesterday in the group call we did in my private group, hopefully you guys remember what we were talking about and you could bring some of that intel we gathered into today's trading. Right, but again, this is pretty much the building blocks of what we're looking for. Continuing to buy, or at least be favoring bullishness. We took out a low over here. That may be the opposing liquidity. We've also used the inversion, right? Let me go see where that was at again. So yeah, it's pretty much a bullish fair value gap still. And then again, this is where we're going to root ourselves for navigation. We have an order block here, so let's see if it displaces and can use that in line with the bullish breaker. Again, if this does displace, right, this looks like a market maker buy model, right? Consolidation, accumulation inside of Asia yesterday, and then another accumulation, price breaking out could present us with a smart money reversal, and then this level, right, from this low to that high, or simply the breaker should act as support. Then once we get up above here and we trade back into this range as like a retracement, that should be able to hold too, and then that should be a very quick delivery, which then could get us up above here pretty quickly, and then violating what I just mentioned here about the gap here and the wick and then the fair value gap. If we can get above that, that shows that a previous balanced price range that was supporting down delivery for the retracement is now being violated to support the continued buy side delivery. And then DXY falling at the same time as that obviously could be very beneficial in continuing to help us trust and gain clarity behind the buy side delivery. All right, so yeah, very important stuff. Very, very important stuff. Again, you guys, if you do get value from the content, definitely like the video. Does a lot for the channel. It helps me reach more people, and that's kind of the goal. I'm trying to help as many people as I can. So I'm grateful for you guys' support and willingness to support the channel and give me your time, because you could be anywhere else but you're here. So hopefully you come here, get what you are asking for or looking for, right? And hopefully that has to do with clarity, right? Because that's pretty much what I'm handing out. So see, there's nothing happening just yet. The response off the news event, like I said, has not really done much. So it seems like there's going to be a delayed response, given the fact that there's two separate news events. One from a little bit earlier, like recently, at 5:30, and then there's one in an hour and a half from 7 a.m. Pacific Standard Time. So it's like an hour from now. So we'll see, right? And if we trade through this before that, right, before that other news event comes out, when price looks to trade back into it, if it does do that towards or a little bit after the news happens, then the news may be what is used to push from this PD array here, which is, let me see, I think it's a 1 hour. It's a 1 hour wick, 1 hour large wick, right? If it breaks above, but it's a 30-minute order block, right? Because continuous down candles, and then it's also the 30-minute breaker. Maybe it is. Let's move up a little bit and see. Yeah, so it is a 4 hour bullish order block if it can get above the high. We do see there's an order block here on the 4 hour, so that. Something we want to watch. And then again, we have the 8 hour inversion, or 8 hour fair value gap. Let me actually just label that as a normal 8-hour fair value gap. Yeah, so let's watch this response inside this order block here on that 4-hour chart. Breaking through the middle portion of that, this is also technically a bearish breaker on this time frame. So again, these are opposing PD arrays from the higher time frame. So when price hits those levels, if we are bullish, it's going to be used as a reversal, right, or a retracement. Okay. So yeah. And as it breaks, as it gets violated, obviously we're able to continue to support the underlying narrative, which is bullish for the indices, as we've been talking about. Ziad, weekly candle direction. So we're in a range for the Dow, but overall things are correlated for the most part. The Dow, in terms of us trying to seek buys, is unfavorable because the Dow out of the three is the weakest one, or the supposed weakest one, given the failure swing, as the S&P and the Nasdaq have been making higher highs. Okay, so the Dow, I would not recommend trading right now. If you do trade that, pretty much when I talk about the indices, it's kind of like encapsulating all three of them. But obviously there's some slight differences in delivery. But for now, right, there's an SMT. I'm not sure if you watch my Sunday call. I highly recommend you do so every week, especially in times like this, because we kind of give some background information I'm not going to be willing to give here as far as my opinions and why I have those opinions, and what would change them, But for the most part, again, I would not trade the Dow today. Given what we see, this is very nasty when you could simply trade these assets that are moving a lot better, that move pretty similarly. Okay, so yeah. But I would assume if these two are going to go higher, the Dow should go higher too, right? And then if these fail to go higher, the Dow should fail to go higher too, and it should go lower. Okay, but I'm going to continue to support the fact that this could continue to go higher until proven otherwise. Simply if we break down below this breaker candle on the 30-minute, that would be enough for me to start readjusting to try to then look to seek sell side, at least for the short term. And then, of course, if we blow out these lows down here, that turns my attention to sell side for the rest of the week. And then this could be looked at as a manipulation. We can also see that if that happens and it breaks down, that fails to deliver this as a market maker buy model, because you see the elements, right? Consolidation, accumulation, reaccumulation, possible smart money reversal. Should be a distribution higher here in this range. Same with this range up here if we trade into it again after we break it, to then blow out the highs. If that fails and we can't even break above this high and we displace and invalidate these lower levels, then again, that's when we can adjust and start to build a pretty strong understanding that we're going to go lower and we should not push for any buy side delivery. So again, I'm assuming like what we're rooted in today is seeing this go higher, right, to continue going higher. And that is favored if we can get above this high or trace down into it and fail to even attempt to get back to the middle portion, creating this high to that low, and just the breaker pattern as a whole as a bullish balanced price range. And then as long as that holds, we'll continue to be able to support buy side no matter what kind of sloppiness we see on the lower time frame. Right, so that overall is like the narrative and what I'm looking for. But again, looking at what the Dow is looking like, even if I did trade it, which I don't, I would stay away from the Dow in general, right? But you're going to do what you're going to do. But and it is pretty volatile. But it does what it wants to do most of the time. So it's definitely something to consider, especially when you have better assets that move pretty similarly. Like the Nasdaq, it's pretty comparable to the Dow. If the Dow moves slightly more, but you have to deal with, very ugly conditions most of the time, the best choice would be to consider trading the Nasdaq instead. It's just much better. I say the same thing about gold. Maybe controversial. There's ways to trade everything, and I've called gold and other assets recently. It's all the same stuff, but it's highly manipulated by the news. And it needs news and geopolitics for it to, really accelerate or do anything spectacular. Like recently, there's been a lot of geopolitical instability and economic hardships and different things. So people fly to gold. They want to preserve their money, and gold is a way to do that long term. But in terms of trading, there's just better assets to trade. ICT has the same opinion. But if you're trading gold or US 30 and you have been having a good time with it, don't let me sway you, right? You want to be independent thinkers, but that's just my opinion. You'll do what you will. But yeah, in terms of engaging the Dow, I would not even try to mess with it until, of course, it breaks out and starts opening up, because this is the only asset between these three that's overwhelmingly sideways. Plus, it has the failure swing, right? So yeah. So if you're looking to buy, you don't want to buy the asset that has the failure swing. You want to buy the one that has, or some of the ones that have the failure, in this case, to go lower, while this had the failure swing at the highs, showing weakness, and then also the failure swing here, or the actual stop hunt down below that took out the low, versus the Nasdaq and the S&P that have enough interest to stay above the low and go higher. So that gives you evidence in terms of the price delivery that these two are the strength holders and more interested in going higher than the Dow is, aside from the consolidation that we see, right? So checking the bullish fair value gap. Yeah, I'm assuming you're talking about this gap in here, this volume imbalance plus the low here. Measure that out. It's a weekly fair value gap. We've had that outlined, and it is rejecting it. So, again, we're in a potential transit. I'm not sure if you've been here for some of the last couple of weeks. We've been into great detail about what's happening here and what the interest is and where things would transition to sells. The fundamentals also kind of overlapping, what we're seeing, and possibly giving us interest to want to go lower at some point. But again, nothing's changed on the higher time frame. Even on the Dow, it just simply looks like it's been working the sell side pretty aggressively. And it may, still use this weekly fair value gap. It's not invalidated yet. The buys turn off overall for the Dow if we break down below this low, because multiple PD arrays that we use, in that case, 3 specifically, will have been violated if we break down below that. Oh, okay. You're a little bit new. Okay, welcome. For surely welcome. I do focus pretty solely on Nasdaq, but I do obviously look at all 3 because it's needed. So yeah, you don't want to necessarily have an expectation of thousands of points, because they're points in the indexes. Pips and points are a little bit different. Pips are specifically for gold and currencies. Points or handles are what's classified for the movements in the indices. US 30, I'm also assuming that you're using CFDs, not the futures contracts. There may be some discrepancies in some of the price action you see if that's what you're going to need to trade. But overall, the narrative and the things that I paint in terms of where price is going, the logic behind why things should continue or get invalidated, all that stuff is still universal, regardless of whether you're using CFDs or not. So don't be discouraged if you see some stuff on my chart that you don't see in yours. Just pay attention to what the interest is, because a lot of the stuff will overlap because CFDs follow this asset. This is the parent to the CFDs. These assets here, the actual real futures contracts and data, right? So yeah, just some things to consider. I'm grateful that you're gaining some stuff from the knowledge. The longer you stick around, the more you'll learn. I promise you that. That's for sure. So yeah, and if you follow me on Instagram, you can look at testimonials and stuff, both from YouTube and my private group, just to solidify the fact that you have a lot to learn here, and the knowledge I share is transferable, highly transferable. Lots of students can vouch for that too. So I hope you get as much value as many of these other students you see here on the channel. And again, I appreciate you spending time with us. But yeah, so hopefully what I just mentioned makes sense. And again, until I see something dramatic change, we're not going to change our opinion from bullishness. We're going to continue to want to see buy-side delivery. This is kind of the lagger, the Dow, so it may pick up a little bit later. Nothing has turned us off for buys to continue. This just simply looks like it rated the stops, simply reached for a weekly level, used it, traded in between it. The wicks did the damage, but the bodies told the story, and now we're still moving higher. These consecutive up candles, that whole entire range can be used as a potential breaker. Okay, it's getting a little deep into that, so it's a little unreliable. So yeah, we're gonna have to just continue to see. Again, it's very sloppy on the Dow. Okay, so again, I recommend, if you're gonna take my advice, I recommend you gravitating or transitioning to more of a Nasdaq based or an S&P based if you're just learning. S&P is more forgiving, but it has a double size in terms of how many or how much money each point is worth, or each pip, however you want to classify it. And the Nasdaq has half of the value per contract versus the S&P. So it's $50 per point or $5 per point for the S&P, for the E-mini or the micro. And it's $25 per point for the Nasdaq, or $2.50 per micro contract. Okay, so that's the difference between them. And the Nasdaq moves quicker, so it compensates for the lower valuation per contract. Okay, so I love the Nasdaq. It's very clean, very whipsawy. It takes a little while to get used to it. But if you're coming from the Dow, I mean, you get the volatility, you get the craziness. So you'll be just fine moving into the Nasdaq. And it's much, much more clean, and it follows what it's supposed to, versus the Dow that only has 30 stocks in it, which makes it more volatile than ever, or than all the other three. The Nasdaq has 100 stocks it monitors, which is why it's a little bit less volatile, but it's still super volatile compared to the S&P. And the S&P has 500 stocks. That's why it's very slow and steady. It doesn't really change much, but has double valuation, right, for each contract. Okay, so just some things to consider, right? But again, we're still holding for the buy side. Price is still, very lethargic. 7 o'clock is coming, right? The news event is coming later. So again, we're not going to be in here trying to rush things. What we can start to analyze, though, is the 8-hour fair value gap, again, is being held. And we also now see the up wick here traded through, and then price came down. What did it do? Respected the middle portion of that wick that overlapped all these candles, because this portion of price action is what I call a rolling balanced price range. Okay? Basically, balanced price ranges inside of a range that's already delivering, basically using the specific price delivery to be like building blocks, right? Just continuing to hold price moving higher, similar to how PD arrays are used. But this just kind of gives you a little more depth and detail for why it should be holding. And then if it gets violated, right, we start invalidating rolling balanced price ranges or overall balanced price ranges, in this case maybe to the downside. That would put us in position to start being flexible and maybe adjust, depending on whether the higher time frame supports that adjustment or not. All right, so that is some of my best weapons right there, that topic. So hopefully it made sense. Again, we go into great detail of this in my private group. So if that's something you're interested in, you like my teaching style, you want to have more access, like more one-on-ones and everyday live calls versus twice a week and once per week for like live trading, you can check out what the private group has to offer. And this massive testimonials both on the enrollment page and then also in my Instagram channel. And then there's many students here that are on my live calls that are either longtime YouTube supporters for the YouTube family, but then also my private group students, they hop on from time to time too, like Fotis, right, the blessed trader in the chat, Mike Koza, Michael, he's also in my private group as of recently, so they can, you can reach out to them if you want to get some insight as far as what's offered and how we run that. But yeah, I give a lot of information on YouTube too. I have students like Tony and Nutty Fuffa and many Joan too. Joan's also part of the private group. But students like Tony and many others that hop on YouTube constantly can also let you know what you can learn here, what's offered, and assure you that your time is well spent here. Even though the channel's small, even though there's not like thousands of people, you could just take that as it being exclusive, right? We're in our little corner of the internet hitting 80+% for 7 straight months live on YouTube and in my private group. So, I mean, I'm not sure who else can do that and do it publicly and consistently. But that in itself is a testament to what we do here. So, yeah, I just wanted to mention some of that stuff because you are new, and I want to assure you that your time is well spent here. So if you ever have questions, let me know. Right, as you did, the questions you guys ask helps the whole community, because maybe there's someone that's shy, that doesn't want to look dumb or feels like they're going to look stupid for asking a question. That you could help those students by asking questions. Anybody that has any negativity will also be banned and kicked. It's the same rules in my private group. Any shenanigans ends up, getting pushed out the door. So yeah, you can rest assured that it's a safe place for you to ask any questions, because the internet is wild at times, right? So yeah. So do you guys have any questions about our opinions right now? What we're waiting for, what we're looking for, key levels that we're looking for? Because once we get beyond the 6:30 time, which is in 9 minutes, we're going to be very, very much focused on trying to identify a victim. So I appreciate you guys liking the video. It's much appreciated. And let me see. Tony, what did Tony say? Tony said he grew $61 to $225. For the record, I don't encourage you guys to do those types of things because automatically you're over leveraging right away, unless you're doing like nano lots for Forex. But hey, it works. Everything works. So if you're going to do it and succeed like Tony, so be it. I don't discourage anyone from trying it, but I also don't encourage it. Right? So yeah. But good job, Tony. Always doing something incredible. He said he passed like 5 funded accounts this year since he's been with me, which is pretty amazing. So good job, Tony. Always going to give you guys your flowers for doing very well. That's why I'm here, right? I'm here to see you guys progress. I'm not here to toot my own horn. My results do that for me. I don't have to be flamboyant. The things that I do live kind of do that for me. So, all right, for sure, Ziad. I hope I'm saying your name right. But yeah, stick around and you'll have no choice but to succeed, or at least improve. Success, proximity to success, meaning like the closer you are to success or people that are where you want to be, it'll have no choice but to bleed onto you. That's why apprenticeships are important. That's what my private group is. It's an apprenticeship program. You get to be live with me 5-6 days a week. Ask me any questions, set up one-on-ones. So it's kind of just like a more intimate learning and more, I guess you could say, immersive, active, like shadow type thing. Like you're able to shadow me every single day, and then of course ask questions and stuff. Versus YouTube, that only has access on like Instagram and the comments and twice a week. So because I'm live every day, regardless of whether I have a private group or not, or any YouTubes or anything. I've been doing this for going on 6 years straight, no days off, except this year I've taken Saturdays off. But even Saturdays I've had to do one-on-ones as well, so technically not much. I know, I haven't seen Sufi in a while. He's been sending out some stuff in the private group, so he's been doing okay. I I'm gonna have to shout Sufi out again because I still don't have the things I've been asking for. Same with like 6 other people. Okay, in terms of the trading plan development subjects, and give me the knowledge that you have or had when you first started versus right now. That's like a structured way for me to help you improve. And there's a strong commonality between students that have given me that, who succeed, and then some that haven't, that still deal with some issues that they're trying to overcome. So it's very important. Everything's done with a purpose here. Especially in my private group, it's set up in a way for success. And, I've had pretty good results. I've had over 40 students either quit their job or have this as a supplemental income just on their own without me giving signals, because I don't just come out here and say, hey, take this buy or take this sell. I give you a framework and a setup, and you find your model, because that's the best way for you to learn. And if it doesn't line up, then so be it. You got some more stuff to learn. So yeah, it's nothing to be upset about, right? But this is the best way to learn. It's the best way that I learned. I have another mentor named Joe Miller who did this exact thing. I learned how to be a good mentor from another mentor that's an ICT trader for like the last 13 years, who manages funds upwards of hundreds of millions of dollars, which you can go verify. His name's Joe Miller. He has a Telegram channel. He doesn't have a YouTube channel. I think he has a YouTube channel, but he's not really consistent with it because he's got other things to do. And he has a pretty large mentorship community that's quadruple the price of mine, right? For good reason. But then again, I'll never raise the price. I'm here to help, and I do more than enough financially in trading. I don't have to, push a lot of high ticket things, because I sincerely want to help. And the main part of my business with trading is trading. That's not to say that Joe or anybody else doesn't have things that way. We just have a different philosophy in terms of some things. But yeah. So yeah, let's see what happens here going into the open. Keeping in mind what we've talked about, we see DXY still accelerating here. So let's actually start to move down to like the 5 minutes, see what we could see in here. I'm sick of getting logged out of my broker every week. It's so irritating. We'll be right in line with stuff and I'll get taken out. Or it logs me out of the damn thing. Alright, so looks like our opinion has been successful, at least up until this point. The breaker candle up here. We have the upper areas up here to watch too for the fair value gap that's available. And then we got the high up here too to watch, as I said, has been what our main objective is. Alright, so now we got this in here. Let's see, can this turn into an immediate rebalance? If it trades down into that and then starts pushing away, that may be something fruitful to continue triggering buy-side delivery. Too close to the open, as you guys know that have been with me for a while, I don't take trades right at the open. I let at least 20 to 30 minutes pass because it's just, it's too reckless. You could be correct on bias and narrative, but you execute too early and it whips you out, then it goes in your direction. A lot of that happens if you trade before the open price or the open of the New York AM session, or if you take a trade too early within the AM session, not letting it print out a little bit. We got relative equal highs up here, fair value gap, run on stops. So we'll watch what this does here. And then the underlying objective is us seeing this create a breaker here, which sets up a higher time frame framework. And then we could go into that higher time frame framework and position our lower time frame execution to then ride out a larger portion of the daily range because it's framed on the higher time frame. In this case, it's a 30-minute breaker. Yeah, and our ability to wait and allow the rules, like what I've just mentioned, to take place, will allow for, even if price was to turn around and go against that opinion, it'll allow for us to be patient and, wait it out a little bit. So yeah, we've taken out the buy side here. Now we see a pretty aggressive return back into this range. You could kind of see why I didn't say, yeah, this is a good buy opportunity, right? And again, the rules, yet again, come into play in terms of not taking executions and being comfortable with not taking executions right at the 6:30 open. So yeah, let's see how this low, high, lower low behaves. Got a fair value gap in here. If we respect that and don't even attempt to trade deeper into it, it'll probably hold and then try to push price a little deeper. Right, so we did peak above the breaker, the 30-minute potential breaker, but this is a very fast response, so I'm not overwhelmingly excited about that in terms of buy side. So yeah, we'll let this open up a little bit. Still got DXY pushing lower a little bit. Let's go look at the 3 indices. Got a volume imbalance in here. Price came up into it. Now we've rejected. So again, our line in the sand for buy side to turn off entirely is if price closes below this fair value gap here, because then it will most likely be used as an inversion. But then of course we have this order block here that may continue to hold. And then of course the overall change in what I believe in terms of narrative occurs down here, because then we will have a shift in market structure on the higher time frame. 3 PD arrays getting violated, right? Because we never pick a top and start to short because there's a retracement, right? It's taken buy side, so it's reasonable for them to want to dig deeper into this, at least in some capacity, right? So yeah, it looks pretty aggressive, right? Again, we do have that SMT at the highs, right? So, right, we have SMT at these highs too on the lower time frame view. So again, we're gauging whether price is going to want to dig lower, right? And the process we're using is helping us do that. We have an order block here. If it breaks below this low and then closes below this inversion, in order for us to get back in line with buys in this case, if it was to continue going higher later, we would have to break through these levels in here. The displacement we're seeing right now is not convincing of any type of buy side. So we're going to have to see what happens here. Again, we're still early in the open. So we're going to let price print up into the 650 macro and see what happens as a result of that. But this is very, very strong breaking down through all this liquidity down here. Okay, and then like I mapped out earlier, right, we have this low, which is relative equal lows, and it's also London's low. So London's high was purged yet again. And then now we've went to target London's low. I do, at least from what we're seeing here, believe that this London's low has a pretty strong chance of getting violated. Nothing in here is telling me to buy yet, or that buys are going to be supported. We've actually traded through a level that I would have rather seen hold if we were going to be overwhelmingly bullish. This is not overwhelmingly bullish here, right? So we started the session trying to gauge whether this was going to hold and support that, because the higher time frame hasn't been turned off for buys. And now we've seen this huge displacement here. DXY looks like it may rebound. We'll see. But we also have the London's low down here that may get targeted. So this is the 30-second chart. If we move up a little bit, we can start to see it's a mess in there, right? It's trading both directions. This has not been supported, right? So we can actually remove that for now. And now we got this overlapping fair value gap. Actually, that's what I will slap in here for the near-term price delivery. So if it returns back into this fair value gap and then displaces again, that would end up supporting potential attacks further to the London low. We're still doing work inside this 8-hour fair value gap. So again, you can kind of see why we're not going to flip-flop, why we're not going to hold on to something too dramatically right now. We have to let price print and give us a little bit more information. We're early in the session, so we'll see what takes place in here, right? And then, of course, again, if it displaces again and ends up getting above this high, then that may set us up for a further run. Still showing support to this. This here is an order block. It's a pretty dynamic response off of that order block in there. which I believe was on the 4 hour, but I don't have the 4 hour marker, so we'll just mark that off like that. That's pretty telling, right? It's a pretty strong movement. So again, if we start to break these other levels in here, then we can look to adjust to then try to find a later short inside the silver bullet. So we're letting price print for us, okay? Where is the fair value gap? All right, is it going to turn into an inversion? Or is it going to continue to hold in here and then displace higher once more, using all of that delivery we just looked at as a potential manipulation to pull people in? Anybody looking at price right now that doesn't see the higher time frame will be thinking short. And again, maybe it does short from here and targets the London's low. I'm not against that opinion, right? So let's go look at the lows in here. Let's come over here, look at that. Yeah, there's a huge crack in correlation. So again, that's not overwhelmingly behind the fact that buy side is completely done. Look at the break in correlation. That is a low probability environment. Just that observation, the crack in correlation, is a low probability environment. Alright, so now we're coming back into the fair value gap here. Remember what I said about the range, that retracement? The price is now trading back into, right? This here and this specifically, price is trading into that. It should be able to hold that, this delivery in here, this high to that low. It should be able to stay above the middle portion. This is the parent to this one, so we use this. So this high to that low, the middle portion should be able to continue to be respected if we're going to continue to try to seek buy side delivery. Buys have not been upset yet just because we saw this big pullback in here. You know, now if we continue to deliver and we break this low, which is London's low, that will potentially be a different story, because we'll then start to see multiple PD arrays violated, especially if DXY wants to rally in that case, right? And that could start to justify a potential for adjustment to sell side observations. But mind you, all that stuff has not been fully confirmed yet. You know, there is S&T at these highs between the Dow and the Nasdaq and the S&P. We are respecting things like this, so we'll see if that wants to continue. We're going to have to start pushing higher and not really look to violate these levels if we're going to trust that buys are going to continue. But again, we're letting price print until time gets into alignment. What time? The macro. We're letting the first 30 minutes of the range print. Okay, we got to go observe a couple other things real quick. So if we take, the regular trading hours gap is also extremely tiny. That is a indication of low probability. Maybe you guys caught that throughout the last couple years that when ICT mentioned it, when he was talking about low probability, high probability. But a small regular trading hours gap can sometimes present you with a difficult low probability condition, aside from the crack in correlation, aside from, you know, consolidations and whatnot. So yeah. So again, we're watching what price is going to do here. This is the 630 candle exactly. If we drop down here to this is the first presented fair value gap. So we need to see, are we going to stay below this? Or are we going to trade back above it and then get above the first 30 minutes range too, right? I talk about that all the time as well, right? We're going to just position this stuff real quick. The first 30 minutes. This is the range for the first 30 minutes of the daily range. Okay, so if price can get above this, and can stay above the first presented fair value gap, and then can get above the regular trading hours gap, that puts us in position for a very reliable run to the buy side. Now, vice versa, right? If we stay below it and say DXY looks to accelerate and we start to continue to see lows get violated, while we stay below those 3 reference points, that is supportive of price going lower. This is a very easy way to gauge real-time price delivery within your higher time frame narrative. Okay. As you can see, we're staying below it for now, and what's happening? Price is favoring, pushing lower for the time being. We got relative equal lows here. Again, we got London's low right here that's very much available. I don't believe they're going to leave that. They may just run down into that, sweep it, and then run higher if they do choose to do that. And then if we were to run higher, that would create this delivery to the sell side as a potential market maker buy model to push higher. But again, that's just like somewhat forecasting possible scenarios. For now, we could see that the London's low is pretty likely to be blown out, like I mentioned. I don't see them leaving that available. If you wanted to make the argument that this was, potentially within your model, this could have been an aggressive early open execution. It's outside of my rules, obviously, right? Because I don't take trades generally so close to the open. Sometimes those rules make me miss trades. That's just how the cookie crumbles. But pretty much all the time, it saves me from bad trades. In this environment, you want to aim for 20 to 30 points as well. How big was your stop, Supreme? Was it like 5-10 points or something? I'm assuming you took a short in here. I mean, your stop reasonably should have at least been above the fair value gap that created the move that you potentially took if you took it here. Oh, you took a short up here? It's kind of picking a top, don't you think? Well, I mean, unless your model is turtle soup, then that's understandable. But you don't want to pick tops, and that's why. And you also want to consider not taking trades right at the open. This right here, though, again, you can make the argument that this was a decent move. Nothing wrong with that. Oh yeah, you took a trade right before the open. See, I talk about that issue all the time. That's something that happens with many students that come to me. They get the bias and narrative right, but they get stopped out too early. 99% of the time, they're taking executions too close to the open or outside of a macro, right? Or sometimes they're taking trades, before the open at 6:30 or 9:30, right? So yeah, this delivery below this low, high, lower low, this should be able to hold as a balanced price range in here. So this institutional order flow entry drill targeting the London's low makes sense. DXY is falling, so I'm not very trustworthy in terms of this being an overwhelming short for the overall daily range. So yeah, we'll see. I don't like the fact that this is so cracked in correlation. I really don't like the just disjointed behavior in here. So given the circumstances, I'm not interested in trying to attack anything for now. Like I said, there's an argument for this move in here. Okay, because we got run-on stops, shift in market structure, fair value gap. We got delivery here. This low to the high up there overlap with this gap, so it didn't have to come back into it. So that's why it supported this and then targeted the London low. I want to see how London low is going to be used this morning. If we get displacement and price gets above this level, we get back in line with potential buy-side delivery. And this could just simply have been just a strong manipulation, possibly to set the low of the day. London high, London low, a lot of times are the highs and lows of the day, at least for currencies and stuff. But, sometimes the higher low of the day can form for the indices inside the AM session, because that's just, what it is. So you want to keep that in mind. So that would make this potentially setting the low, the day, to go higher. If we break above the high, that would make that make sense. But we'll see, right? We're not going to assume that right now. We're going to wait and continue to watch price as it supports this as a balanced price range. If it is going to be continuing to go lower, that could be an argument for this whole delivery to the buy side breaking down. This middle portion shouldn't even get traded back too if we're going to continue to support the short idea. But again, taking shorts, trying to gain hundreds of points in this environment, to me, is picking a top, simply because we're not fully justified in the fact that price is now going to change from bullish to bearishness yet. It just looks like it's still retracing. So again, there was an argument for the overall idea to catch a short in there. We have broken down below these levels, so that is somewhat convincing that we may start to see more evidence that we're going to be willing to short, right? So buys are not of interest yet, right? At all. Okay, the levels that we wanted to see hold for buys have been turned off. So now we're going to need price to kick back in line and start supporting it. Otherwise, shorts are the only thing of interest right now. And that's where I will be looking to position moving into the macro. So remember what I said about the news taking place over here? How it would be potentially a lagged response. We still haven't even approached the news event yet. And all this flurry of price delivery has taken place. So yeah, we'll see. But yeah, this is not convincing that buys are going to continue. There's this huge crack in correlation for some reason. The Dow is just very excited to run higher, and the Nasdaq it gave us this pretty powerful rejection after leaving equal highs, but it did peak up above here. It did peak up above there and then reject. So yeah, this low, these consecutive up candles breaking down. We could watch this as a bearish order block, right, like I mentioned. So we also have this wick. Let's see if we move up, if we have an even larger one. So yeah, again, we have this down movement and the down candle in here. That could be used as a breaker if we get below this. All right, so breaking down below this low, we should not have to return back to the middle portion of this range. Again, I'm not assuming that we're overwhelmingly bearish just yet, simply because, the only thing that's done this large decline, which is still within this range, is the Nasdaq. And again, there is an argument for that initial idea, given the early displacement in here. And then, of course, that's breaking down below this, right? There's an inversion here that held price. And then once it got below that, again, we had a very logical level, which is the London's low here. Which, again, things were outside of what I prefer to engage or how I want to engage timing-wise. And things have just, moved. So I will be looking for, the actual idea of what's going to take place. Maybe it is going to continue to short. For now, that's the opinion, right? Initially, it was a buy, just in case we were able to see this hold. It didn't hold, so we got to be flexible. Narrative higher time frame wise still has not changed overall. The Nasdaq is looking like it's the weaker of the three, or the more interested asset to decline. This is pretty convincing. That's a huge candle, right? None of the other ones are doing that. If anything, they're doing the opposite here. And this one is somewhat, right, on the S&P, somewhat supporting that down movement. We'll see if that continues and gets more relevant as time goes by. But yeah, if we move up in time frames, take off some of that. Yeah, we still have the wick in here, and then we still have the fair value gap. So maybe it's reaching for that. It could be still remaining bullish all the way up until this point, right? Because on this time frame, these are 3 PD arrays. All right, we do have this order block here, so if it breaks through that low, which is a previous day's low, right? If it was to break through that, sweep it and then displace above, and then respect this and then displace once more to the downside, that's pretty convincing for us to start having early signs of bearishness. Okay, but for now, right, I'm in a state of observation. This was a huge run. It's very easy for you to go in there and think that you got to chase something, but there's no need to chase anything. You know what I mean? The initial idea was to see this hold, maybe sweep the low, use this fair value gap to do something like this, but then run higher. That ended up failing, right? So I could have made the argument that this here could have been an execution, right? This and here could potentially have been reasonably used as a sell side opinion to target simply the London's low, right? So we've blown well beyond that, and now we're trading pretty deep inside this 8 hour, and that potential BPR I was talking about, we've traded through the middle. So that's starting to reasonably give us reasons to be flexible and consider the fact that shorts may in fact hold up, right? And again, there has been 2 potential opportunities in there if you did have the opinion or interest to target the London's low, like I said, was probably the target when we saw this. All right. If not, again, you have nothing to worry about. You have nothing to be upset about. You have nothing to overly analyze. Okay. This type of stuff happens, you know. And like I mentioned too earlier, the regular trading hours gap, the first presented fair value gap in here, and then the first 30 minutes of the overnight range from the open, right? 30 minutes out, you get that little range and you drag it over. Us staying below that stuff presents us with a likelihood of staying to the downside, right? Because we've stayed below it. If it was to do the other side and get above it, in line with the higher time frame narrative going higher, then of course that's something that we can support going to the buy side as well. So hopefully that logic is making sense and it's easily applicable to you, because that's very important. You know, it's just another element of confirmation, real time, that can help you gain clarity with what you're doing. Okay, and for now, again, nothing has shown us bullishness is going to be favored. There's large cracks in correlation, so we are in low probability. We've had a low resistance run through the sell side here, which has not really translated to the others. It seems like we're starting to have it translate with the S&P. All right, so it's definitely looking like it's committing to it a lot further now. And again, we've had the opinion that there may be a time very soon where they will offload their buy positions based on the COT analysis. Okay, so that's an underlying thing that we've been observing as well recently. So if this is, you know, the start of that move, right? We've been able to anticipate that this was going to happen soon. You don't know exactly when it's going to happen until there's a breakdown, like, you know, something like this taking place when it comes to the COT or seasonality. So you may be witnessing that. And those of you that have been here listening for weeks to me talk about this stuff, I kind of hope it does do this, because then it'll be yet another example of the importance of fundamental analysis and how it can help you get confident when things change, or understand and know when things change, so that you can make adjustments. Right? So yeah, we'll see. We're now below this, so now we have the opportunity to watch this not only as an inversion fair value gap on the 8 hour, but we also have the chance to see this as a possible breaker. I think I'm going to use this as a possible breaker and just kind of let this be a little bit clean. And I'll take this order block mark off because that's been taken out. We can use that as a fair value gap. And this can end up being a breaker. So if we can return into that and all this stuff continues to tank, maybe we could see DXY rally, which I'm hoping we can see. If we are going to turn, then we could look for something to position inside of this area and classify this low to high as a shift in market structure, and then a potential PD array that could then form a lower time frame execution down inside this level. So yeah, now we've seen the transition there. Again, that's a massive drop. I'm not too sure what in the hell is causing that. Maybe it was the Fed speech that caused that. Not too sure what he talked about. But yeah, there's been like an undertone of a breakdown in the stock market recently. I've been hearing it not only from our own observations, but I've been hearing it. That's why people have been flocking to gold and some of these hard assets. Because there's still some underlying stuff taking place that's not too positive, along with some of the good stuff, right? But yeah, it's COT and all these other things, and now we're seeing it potentially manifest in here. So we're gonna have to see. The only time I will look for potential buys to continue and then look to target buy side, like these highs and this high, and get in line with continued bullishness again, is if we were to break above this breaker middle portion. Otherwise, it's not going to be too trustworthy given what we've seen so far. I mean, this is a new weekly low. We have the weekly high set, so we're going to have to determine which is going to be more favored now that we're pulling back inside of this range in here. Still very sloppy and nasty in the Dow. Hopefully, Ziad, if you're still here, hopefully you took my advice and did not do anything whatsoever when it came to the Dow. Anyone else that trades the Dow, hopefully you took that advice. Because, I mean, look what happened. Just nasty. Right? And it's doing the opposite of what everything is doing because it does what the hell it wants. Right? It's a beautiful example of the Dow doing that type of thing. Okay, but yeah, there's been a pretty strong breakdown, so again, I'm not really interested in trying to catch any real, buy side delivery. It's nothing really convincing in that regard. So attention is at shorts. Not sure where the hell my not too sure where my chart went that had the freaking breaker on it. Where did it go? Yeah, I'm not too sure why it didn't save it. That was strange. Oh, I did it on these here. That's where I had it. Okay. So yeah, now we're returning into the breaker, so we're going to have to watch and see what happens in here as a result. It's a pretty strong breakdown, so, we'll see. I'm going to need a lot to get back in line with buys, because this is just too exaggerated. Let's see, so now we're returning into that breaker. Again, it should be able to hold that if it is going to want to deliver. Do I already have my broker up? Yeah, okay. So yeah, this return in here is pretty nice given the huge displacement. Clearly they're interested in sell side off the heels of that news, the Fed news. Let me go see if there's any statements we could find. So in 1 minute, there's going to be another news event. So let's see. Central bank interest. Yeah, so we're starting the interest rate conversation. They're starting the interest rate conversation. So yeah, that's a pretty nice retracement into the PD array that we mapped out. It's just a little bit overwhelmingly sold off, but it makes sense if this is going to hold and be a valid breaker that it's not going to trade too deeply into it. Because why? Because breakers are balanced price ranges. Okay, so the whole delivery to the buy side, and then the delivery through to the sell side, leaving the breaker candle, should be balanced. So it shouldn't have much of a reaction. This is a beautiful response from the breaker there. That's exactly what we want to see. If there was no secondary news coming in a minute, I would have, executed somewhere in here. But this news, we're going to have to see what happens in 30 seconds. So yeah, if we were to get price to trade back above this high, leave a swing low, and then break back down below it, leaving a fair value gap or some other PD array that we like to see for a model, I have 4, right? But, whichever one you use, if this happens, attempts one more time, sweeps it, and then rejects, that'd be the ideal scenario. This could potentially be an aggressive one using the retracement into the fair value gap, rooted in the breaker delivery, trusting that that'll deliver. It's a little bit more aggressive, kind of just using the higher time frame view, translating to the lower time frame. But yeah, just going to continue to wait and see how this is going to respond here. It's been a little bit more aggressive than anticipated. So with that being said, we got to be very calm. Okay, you can't go in there trying to chase. We still need to find our model performing. This technically is part of my model, the breaker, right? But I would like to see a lower time frame position form so that we can try to execute on that. We have this here, low, high. Makes a lower low. If it returns back into it, that may be something worthy of watching. We do have this here on the 15 second, low, high, breakdown. This is a YouTube model in here on the 15 second. Also overlapping with a breaker. So yeah, it seems like, again, this is going to continue. You should have no interest in buys until proven. It's going to have to kick that back in order. We don't pick highs. We don't pick lows in terms of execution. But man, this has been super aggressive. So we're still kind of watching to see what the DXY is going to do. I mean, it's just been continuing to drop too. We had a little jolt here. And now we're starting to see all the indices fall in line. There wasn't really much of a SMT to observe. There was that order block on the 4 hour I talked about earlier. All right, we do have this fair value gap that's now been fully overlapped, like well beyond. And then we also have these lower areas I said that could be part of the equation if we were to have a breakdown like this. This is a pretty convincing breakdown. Again, I'm going to need something real serious back to the buy side to think buys are going to continue, especially given the underlying stuff I've been talking about that could lead to this changing from bullish to bearish, offloading of buy positions in the COT. So, this is pretty convincing. This is what you want to see that would support that type of observation. You can also see that Friday's low here was targeted, right? I mentioned Friday's low and Friday's high early in the week, and I've had it outlined, right? So you could see that that was the objective for the whole move up until this point. And yeah, we got this fair value gap in there too. Let's see, 8 hour. We got that large wick. So again, I'd really enjoy seeing price try to trade back into it. It may not, right? What could make that not happen, right? In terms of us trading back into it. We have this as a balanced price range in here. We have this upper portion as a balanced price range. Okay, so those are going to have to be violated in some way, right? Basically seeing price aggressively trade back through them in order for us to get away from shorts. Otherwise, shorts are the only opinion that's worthwhile up until this point, right? Since this huge decline. Right, and then this fair value gap in here, overlapping with this huge displacement. Again, that's a BPR. So if we trade into that, it shouldn't spend much time there, and it should be able to continue to drop. Right, so yeah. You got to ask yourself, is there anything in there that shows you your model, aside from you just thinking it's going to drop just because it's been super aggressive, in my opinion? Right? Is there anything in here that supports your model, whatever that is? Those are the big, important questions you need to ask. Again, waiting for mitigate 4-hour candle last week Wednesday. Anticipating tomorrow we can visit the rejection bug from last week. Yo, what is good, Harley? One of my superstars. Currently, new day opening gap was pretty clean. Yep. Yeah, for sure was. Yeah, Harley, you've been hearing me recently talk about the COT offloading of buy positions. This is absolutely what you want to see, right? So we'll see if it continues. Okay, we're not going to chase any of this, right? We need liquidity to be taken, and then if we sweep this high and we trade into this, but still respect the bearish breaker here, and then it displaces once more, leaving us a model after taking some stops in here, because this is the 30-second chart, right? I would ideally want to see that, right? So let's go kind of flip through some of the indices, see if there's a SMT of some kind that we could find using this current delivery in here. Bigger regular trading hours gap on that. So yeah, we got stop hunt in here. We got a fair value gap in here to watch. So this low to that high, I believe if you move up, that'll be some type of order block. It's also a pretty big wick. So again, if it was to trade below that, that'll be used as resistance. Again, you got to make the argument for your model. If your model's not in there, we also have a bigger one in here, by the way. But if your model's not in there and you're just looking to execute just because you don't want to miss something or you think it's going to move and you're just feeling like it's going to move, so you're just going to take an execution anywhere, you are making a very bad mistake that will turn into a habit that will completely destroy your success or your ability to even be successful or consistent. Okay, so watching the middle portion here, it should be able to stay below this if it is going to continue to go lower, at least within this price delivery. If it does trade up above this, we're going to have to see another displacement shifting market structure after taking the high, which, you know, it's within the, I think it's within a break or two here on this time frame. I really don't like how the equal highs up here are so clean for the S&P. I didn't even notice that. That is a bit concerning, but until it proves like displacement back through some of this liquidity in here, I think we'll still hold on to the opinion that, you know, we may continue to see shorts. I mean, this is so exaggerated. I mean, you could just see how it's made it difficult for people to really trust that buys will continue, right? But, you know, to see the real storyline of everything and whether stuff is sincerely changed in the grand scheme of things, we look up on these time frames and we could see, I mean, it just looks like a retracement. You know, it's been super sloppy for the S&P, and we've just continued to make all-time highs. But yeah, again, if we break through that breaker area in here and it gets up into here, we could classify this as a market maker buy model. Otherwise, if we respect this, it'll continue to drop. So we're going to continue to monitor what the reaction is going to be like in here. We're still inside of a macro, right? The draw from here up to the swing high up here, even if that was going to set up a short, that's still set up a potential opportunity in there for a counter trend move. Right? We also hit the daily wick consequent encroachment that is an opposing PD array to the drop that also could have been used as part of that framework for the retracement in there. So yeah, I'm personally monitoring what it's going to do in here, right? What is it going to respond like inside this breaker? If we were to break down through these fair value gaps again, that'll, you know, potentially be enough if I could find my model to then take a short. You know, yes, it's already been delivered, but we don't have to worry about missing a move in here. What we do got to worry about is not being like everybody else and chasing price. These people here, unless there was their model in there of some kind, they chase price. You know, anything in here that you took just because you think it's going to go down, you chase price. Next time you do it, you're going to get hurt. You know, one of these days, it will bite you in the ass. So there's a method to getting back in line with a moving market. I'm kind of showing you that right now. Hopefully you see it, right? You have to wait, right? You got to wait, right? We need liquidity taken. If you're using the YouTube model 2022, right, it needs to take liquidity, and then it has to set up the rules on whatever execution time frame you're on. You know, again, currently we're inside of this potential bearish breaker. DXY is now running higher, supporting that. Right, we got a swing low in here. Let's see, can it dig a little deeper? Fail to hit the middle portion and then give another displacement candle, leaving a fair value gap in here, again, that would be potentially something we could make an argument for to continue to try to seek further sell side. We have definitely blown out a whole lot, so everybody and their mama is probably trying to sell in here. So again, it just shows why this is so important, especially when you're trying to get back in line with something. You got to wait for certain stuff to take place. So those specific things are liquidity being taken, and then once that happens, higher time frame PD array supporting the move, and then of course your model setting up on your execution time frame, and then a logical draw on liquidity. If we go to the 4 hour, we have this swing low here. Could be reasonable. We've got this wick, right? Different pieces of that wick. If we're assuming that it was to go lower, we don't really have to worry about these other PD arrays stopping us. It may hit other PD arrays in reverse, right? In terms of slight counter trend moves or reversals or pauses in the overall trend. But yeah, we're kind of seeing that here, right? It kind of just dug below this low. Now it's retracing after closing in this whole fair value gap, right? So we got to see what this is going to do in here. We have up until the middle portion of this breaker. Let me put that middle line. So we have up until that middle portion of the breaker to watch to see if we can further confirm that shorts are in fact going to continue throughout the session. If it breaks through that stuff again, this whole decline, leaving these relative equal highs up here like the S&P did, may simply be the massive manipulation environment that we're working within. Because again, the daily chart doesn't show the 2-day chart, right? Even the daily chart doesn't fully show that multiple PD arrays have been violated and structurally the buy side's been upset. It's just a simple lower time frame, strong displacement reaching for a fair value gap, right, on the daily. I can actually take that wick away. Kind of map this out. I don't know why I didn't have that placed. I would have preferred to see this not get traded to, given the wick, right? Talking about the rules I talked about earlier about overlapping wicks and fair value gaps, but it doesn't mean it can't trade into it, right? It just means it's less, in this case, bullish than we would have preferred when we were up here. But yeah, so right now, again, hopefully you guys are aware of what we're looking at. We're trying to see how price is going to behave in here to see if we can continue to support the overall delivery back to the downside. But again, the higher time frame is not fully turned off, right, in terms of buys. So if it was to displace through this, we'll just look at this as a market maker buy model and then try to execute a little bit later in that market maker buy model for a second stage distribution, a little bit up here where some of the accumulation is up here. So we got consolidation, accumulation, reaccumulation in here, possible smart money reversal if we disrespect this bearish breaker. And then if it can get up into this level in here, we could catch a very easy low resistance run if the market maker model is going to complete, and then try to blow out the highs up here using one of our models. Whether that's a breaker, YouTube model, fair value gaps, order blocks, whatever model you use, institutional order flow entry drill, all of that can be caught inside of a market maker buy model within one of the phases or sell model. And then again, I made the argument that this could have been a reasonable thought for a retracement, even if it was going to go lower. Whether you're comfortable with that obviously depends on your experience and how you see things. If you don't like counter trend trading, then that's not something to even consider. But the fact that we hit this wick here, the 50% level of the daily wick, that is an opposing PD array to the downtrend, right, or the down movement, right? So what did it do? It used that as a rejection point. That is a way that you could frame counter trend moves, is by seeing where you're headed, in this case dropping lower, and then finding a higher time frame opposing PD array that it taps into. A lot of times that will be when retracements take place. So that could be used as a framework if you find your model within something like this, to then counter trend trade. But yeah, there's nothing I'm too excited about right here. Still, I'm trying to map out what the overall interest is. We're still supporting buy side delivery. Okay, it's been that way the whole time, even in the face of this. But now this here is going to determine whether the buy side is going to be off, because if it supports this bearish breaker, that is beautiful. That means that the whole upper portion from the breaker up to the all-time high should act as a balanced price range. And then if we could see DXY run higher as well, then that'll also support it. But if it breaks through this, again, that's going to confirm or help us confirm that this is potentially going to be a market maker buy model. All right, because in the breaker idea, which would set up the underlying potential bearish run, will have been turned off. Okay, so then why would you want to look for shorts, with that behind you? If the main higher time frame PD array, in this case the bearish breaker, isn't being respected. But if it is respected and we displace below here, don't you think that makes you a little more confident in taking another short? And it's making you think differently than the masses that are just dumping shorts and probably dumping buys, trying to pick the low or chase price. Everyone that was in here chasing price, not thinking like we were thinking, wanting to see this get purged first, they've gotten purged out now, or they're sweating bullets and moving their stop continuously, because they want to demand the price does what they want versus reading what price is telling them what to do. All right, so the thinking is much different, what we do here versus everybody else. So yeah, again, you could see this low, high, potential lower low if it breaks down below that. We also have the breaker here. If it respects that supports this potential low when it gets violated, if it gets violated, for price to go lower. But if it does not break down and, we see DXY decline and then we see price displace back above this high, we have this order block being supported by the failure in the delivery with the bearish breaker and then seeing price go higher, which again, we could then frame out as a market maker buy model. And if you're able to understand the market maker buy and sell models, you even further don't worry about, or you even more don't have to worry about missing a move or being impatient. You just wait for one of the phases to be traded into and then find your model within that and then execute based on what the market maker model and higher time frame are telling you to do. So it takes a lot of guesswork out, right? But then, there's always a point in time where you got to wait. For me, that's what this moment in time is. I'm waiting to see if this low can be relied upon and whether this breaker can hold or not, right? Is this going to be the low of the day, right? In this case, the low of the week as well, because we've blown out all this, right? Or is this displacement here going to respect this retracement to this bearish breaker and then maybe see DXY go lower or go higher, right? See a turnaround at DXY. And then all of that could potentially be supporting our fundamental analysis, offloading of buy positions with the COT analysis, and then the large time frame SMT we've been observing for weeks at this point between the indices. And so again, we're in a moment where we may see a transition, possible quarterly shift, right? Because if this takes place and it does start to favor sell-off, we've been bullish. We're within the 20th and 60th day of the IPTA data range. So this displacement here using this breaker and shift in market structure, if it turns, this is well within the quarterly shift parameters when it comes to the process we use with IPTA 20, 40, 60 day for quarterly shift observations. Okay, so again, that's why this here is going to be very important to watch. That's why I'm waiting. I like the grand scheme of things. I like the big picture stuff. I like moves that fit within this type of logic, and chasing price has nothing to do with anything that we've been talking about. And anyone trying to chase this run lower, unless you had some of the perspectives I talked about earlier targeting the London low, right? This retracement here, just run on stop, shift the market structure, fair value gap, delivery there, or this one here to push into it a little bit further. Those are the only things that I find reasonable to have been able to participate in a short. Everything else, you're chasing price. There's nothing in there really giving you any evidence of a model. Maybe this, right? Because there's a delivery in here overlapping the upper portion of the FVG. Came in, institutional order flow entry drill. But I mean, this huge response here, I mean, it's hard to anticipate that type of volume, or expansion, so given that that's the fact, you have to pull back on your opinion. You need to wait. What are we waiting for now? We're waiting to see how this delivers, right? So if we get a displacement below this low, strong displacement, that may end up setting up something to drop if DXY can also confirm. Otherwise, there's nothing really to do unless you're just going to guess, And if you see a model in here that you want to execute, let me know in the comments. But specifically for me, I am not looking to try to push this too aggressively until certain stuff happens. Zia said, can we use the new week opening gap to look for short continuation? Depending on the context, yes. Right? But for right now, right, I'm waiting for these other specific things to take place aside from the new week opening gap. We could see that it was kind of purged through in here, which is pretty nice. It is still only Tuesday. We're still very early. Okay, so we could very easily see something turn because a higher time frame hasn't changed yet. So this is a great example of having to hold through a narrative even when price goes against you. And then when it finally confirms that things have changed, then you can change your opinion reliably versus being a flip-flopper like 99% of people on social media. Right, so again, I'm in a position of waiting. So yeah, I mentioned these two areas in here, targeting London's low. You could have made reasonable anticipation for that because we did call London's low. And then, of course, once this daily wick was hit, it set up an opportunity here for a retracement targeting this high. All three of these specific little areas in here set up for minimums. The low to high here, this could have been looked at for this execution as a balanced price range, right? Low, high, lower, low. Notice how it didn't even get to the midpoint. So that justified that move. And then this one here, right? Ran the stops, displaced, logical level to be swept for price to start continuing or to set up another move. And you can see that that's played out pretty beautifully. So either one of those scenarios, they're reasonable. Again, I didn't participate in them simply because of the things I've been mentioning. So yeah, but if you saw these little areas in here and thought that made sense to you, and it lines up with some of the stuff that I've been mentioning so far, again, you want to note that in your journal, because there's nothing wrong with that. If you didn't execute but it made sense, that's a win, because you know yourself in that moment. But that's a beautiful deposit to your bank of knowledge. So yeah, it seems like we're kind of stalled out in here. It makes sense because of this very powerful delivery to the downside. But now we're in a mode of trying to gauge whether this was all, just a run to the wick here in that daily fair value gap, which I still didn't translate when I drew it in. So I pretty much closed the entire fair value gap. So yeah, let me do this real quick. So if you think about it, right, if this was what you were seeing on the 5 minute, would this have been something telling you that we're overwhelmingly going to turn around? Like just overall, right? Probably not, right? You just look at this as a possible retracement to the fair value gap, and then, for price to want to continue potentially, right? So that is the perspective we're kind of caught between. Is it going to continue, or is this going to be the time when the fundamentals kick in and they give us that rejection based on the COT and some of the seasonal influences, right? But then when we drop down to some of these lower time frames, we could see that, it looks like there's somewhat of an argument for price to want to short, right? But I'm personally, again, going to have to just wait. I never chase price. I will never encourage you to chase price. And if there's something that we got to wait for, something that I'm going to wait for, I'm going to let you guys know. And the stuff that I've been talking about, it's, the rules that I've been talking about, the hesitation to chase the short, watching this high, targeting London's high, some of the levels we were watching to see if they would hold to go higher. If they failed, it was going to reach down to London's low. All those different things played a role in the overall analysis today. And yes, some of the rules kept me out of moves like this one, right? I refused to take this execution down here. We called the high up here as a likely target. And then when price gets up here, we're going to be able to determine, or corner price in, to be able to determine whether it's going to support this as a market maker buy model, if it was to displace to the buy side and DXY continues this. Or is it going to respect this bearish breaker we've outlined, which is also within the daily fair value gap, right? Is it going to respect those levels and then try to displace lower, justifying the potential early signs of price changing from bullish to bearish for a quarterly shift, right? So these are all the things that are on my mind, and we're going to just continue to wait, This looks like it could be potentially reliable to take a short. It's not looking like this is going to be super interested in wanting to go above. We have respected the middle portion of the breaker, which is what I've been mentioning. I will need a bigger displacement than this, right? I need a larger fair value gap, maybe a displacement through the low of this, and then a return back into it. And then, of course, DXY, if we could get that to run higher, that'd make me more confident in targeting this as a short as well, okay? I can say again, though, if we break above this high, that may set up scenario to buy. But for now, we're going to favor this potentially looking to want to, continue to target lows, accumulation up in this buy side up here, right? So we'll see. So still respecting this, right? There could be like an aggressive opinion, right, using this for value gap. I'm not taking that, right? I'm not going to do it. I want to wait, It's just been very aggressive. So again, like I said, when you see that, the rules you should place on yourself is to wait, okay? And if you miss something, who gives a shit, okay? You'd rather miss something than get in and then regret it later because you just got in because you thought you were missing something, So yeah, we're still dancing around this daily wick 50% level. If we move up a bit, if we're on this time frame, you can kind of see the possibility for an argument here. But again, the reaction above the high, which should act in the form of accumulation in there, and then the slight push below the high up here, below this little low, it's not too exciting, But there could be a reasonable argument for this as well, which is also within the context of the higher time frame bearish breaker potentially holding. So you got the lower time frame possible breaker with the lower time frame, or with the higher time frame breaker kind of nested inside one another, inside of a buy side liquidity pool. So yeah, we can watch how this is gonna behave in here. DXY is being very unreasonable, right? It has been continuing to gravitate lower, but it's just, that's very, very nasty. Look at it. So again, I'm on the side of more patience. Let me go see. Pick a top. Okay. DXY is doing exactly how I marked it out. Yep. Yeah. It's kind of been that way for the last 7 months. Would you say so, Tony? We kind of have opinions on Sunday and then it shows up. Of course, being right on bias and narrative doesn't mean that we'll be able to get in or get an opportunity on the lower time frame to participate in our model. You know, we got to see things line up, right? And then, of course, present our model, right? So, again, I said I'm not going to take this, right? Simply because, you know, I'm going to have to wait. You know, we're still kind of in a justified area for the breaker to hold, but this reaction from there is very lethargic, so it's not very convincing, right? Especially with that, you know, it kind of shows why I was hesitant to want to execute that. So yeah, let's see what happens. Breaking above this high, we shouldn't see it break down below the middle portion from this high to that low. It should be able to hold if it was to get above that little level in there, considering that we've already kind of traded into this. All right, so if it is going to justify a buy-side delivery, DXY is going to continue to drop. I mean, the Dow's not very helpful. It's very sloppy. Huge displacement lower and higher. And then we kind of just look like we've used this delivery to trigger in this liquidity in here. And so again, we're really in a mode of observation of this breaker. Is it going to hold it? Is that going to be a shift or a breakdown? Right, with DXY doing what it's doing, if it continues to just decline like this, it's not very supportive intermarket relationship-wise for that to take place. We got the currencies kind of being a bit sloppy. They're not really doing much. If we move to 4 hour, we could see that the normal bond markets, the 30-year, 10-year, 5-year, they're all looking like they're interested in moving higher here. So that is a strength indication or an interest to attack buy side indication. This is an interest for sell side when it comes to the DXY. Right, it's pretty strongly manifesting in the DXY. And then you can, you know, potentially, or hopefully, we end up seeing the bonds translate to the currencies here, right? Because since they're going higher, if the bonds continue that, hopefully they can put some legs under these to go higher, and then continue with this as well to support that, right? So it's kind of why I'm also kind of a bit hesitant to want to engage a short, especially after something like this. There's things on the back end, intermarket relationship wise, that are very risky to try to push into and go against. So yeah, this being a potential breaker has now been turned off. Let's see if we can move up a little bit and see if we could find like an order block. Oh, there we go. We've got a little order block in there. See how high does that go? What the hell is this? So yeah, it's not unreasonable for them to have done this huge displacement out the gate and then pull back against them. Because you could just think about the psychology in people. They're chasing price. I can imagine anybody that's live streaming right now that's so focused on image, you know, that's just like, I have to get in. I can imagine that they probably got completely wrecked on either side, right? Tony, are you keeping tabs on anybody that's live? Let me know how many people got wrecked today. Just trying to keep it together, right? While we have just been very patient, you know. Haven't pushed a button once. You know, the initial idea to try to see this hold above these levels, use these up candles as a bullish breaker. Once that got turned off again, and this was so aggressive, it automatically kicked my mind into, okay, we're gonna wait. We're gonna wait and see what happens. But again, that execution I talked about down here, seeming more and more logical. Yo, what's up, my brother? Hey, bro, all y'all got to go follow MMT Trading, bro. This is a youngin' that is also, I've been watching him for probably a little bit over a year. Bro is turning into a superstar as well. Amazing. His content is on point. Definitely go support him for sure. Turbo, yep. Maddie, no. But yeah, it's amazing. Amazing. Hope you're doing well, bro. But yeah, we could see again, this is looking more and more like the market maker buy model assumption is going to continue to hold. So we are going to continue to watch how that's going to behave. And we are now pushing deep into the possible higher time frame bearish breaker. Okay, so on that higher time frame. So yeah, we're going to have to watch how that gets violated. If it gets violated, again, any interest to short turns off. Right now, you should have no interest in trying to take a short right now. There should be no interest until it, gives another displacement. We've already done a lot of work in that regard. No, absolutely not. The Arho guy is a scumbag. Just saying. To get a little controversial. People that try to rip off ICT stuff and claim that they created it or they found this or they invented this or that after they just use order blocks and a bunch of stuff that's already taught. It's just, you're a scumbag. Okay. Imagine if it happened to you. Someone goes and takes your shit, doesn't give you no credit, and they're trying to discredit you and talk shit about you, and then they make their own business around it, just completely attacking you. You can imagine how pissed off you would be too. So anyone that does that, it's not something you should look highly on. We can get plenty of attention by, still being humble with things, you know what I mean? But yeah. So yeah, we're watching this here. These candles in here, I'm going to utilize as a first stage distribution area. So that once it gets up there, we could potentially use this as a smart money reversal. Disrespect of the bearish breaker on that higher time frame. So that's a good signal for us to continue to trust that this whole movement was potentially manipulation to possibly set the low of the week. Of course, if this continues and DXY continues to take a nosedive. Oh, whoops. All right, so yeah, this is very nice. So yeah, the breaker idea, potentially holding on, we are now going to use that as a potential inversion. Okay, so scrub around a little bit. And of course we see this high got taken, so high, low, failure swing, right? And then us taking out this high, we should be able to see if this is going to present the market maker buy model. We shouldn't have to come back down below this low or even attempt to get close to the low. I can't say that if we displace and get back down below this area, that'll set the stage for a really, really sharp decline, in my opinion. And then, of course, that would still be justifying this bearish breaker if we can get down below that from this 5 minute. Otherwise, this high to that low should be able to act as a balanced price range. The middle portion in here should be able to hold, shouldn't really have to get down into this fair value gap. And then we should just continue to see the stair climb, apply pressure to these people that are trying to take shorts only. But yeah, guys, make sure you go follow Turbo, MMT Trading. Like Maddie said, he's another GOAT. Very young individual. Me and him got very similar situations with some things in our personal life. Had some conversation with him, so he's overcoming a lot of things, and he's out here shining. So definitely support him as well if you support me. Let me see. Additional questions. So yeah, does everything make sense so far, you guys? You know, you can notice that it's been very mellow. I haven't been like, oh yeah, let's try to, you know, fiend for an execution. We've been laying out some things, but, you know, in circumstances like this, you want to be able to be calm. You don't want to think that you're missing anything, because you're not. You know, things will set up if you could keep your mindset focused and not too concerned about missing anything. You know, so. So yeah, let's watch how this wick is reacted from. Go to the slower time frame. You could see. So yeah, we should not have to come back down to the middle portion of this. I'm just going to eyeball it real quick. And if it was to break down below that, that would turn off the interest to really try to frame this as a market maker buy model. But so far, the market maker buy model idea I mentioned, once we got above this as a possibility, it's looking, you know, more and more convincing that that's going to take place. Okay, and if we move here. Yeah, oof. Look at DXY. Nasty. All right, let's start to try to see what's in here real quick. Move up a little bit. There's an order block in there. So once we get above that, we should be able to stay above it. And then we could use this low as an intermediate term low. We got this fair value gap too. So like I constantly have been, you know, hammering on when it comes to fair value gaps that potentially overlap. If we get price to run up, right, and overlap this, maybe even within this current candle, this should act as a balanced price range below us, right? And then, you know, this low to that high, it should have been able to hold price like it kind of has, right? So we're gonna have to see what the reaction will be from there. But when price breaks through this in here, okay, we're gonna have to look at that as a possible BPR, which again supports the market maker buy model. And then that could also support us taking out the equal highs up here. So yeah, I'm going to just sit back and be patient with this. You know, we've had this huge run. So again, like I said, today is a time of patience. Lots of cracks in correlation, very low probability environment. You could see that there's been some pretty low resistance delivery for the most part. All of this is high resistance. You know, it's high resistance, moved up, low resistance delivery in there. Not really much of an opportunity to frame out an opportunity with, except maybe this. But again, we're still inside that bearish breaker on the 4-hour chart. So I'm trying to gauge whether it's going to hold that or not. But DXY declining like this, if that continues, again, it's not going to really have much life in that bearish breaker. And then the COT idea I've been talking about, you know, we're going to have to keep that in mind. If it was to break down, that's going to support it. Otherwise, the daily chart narrative still being bullish, which, you know, none of this upsets. You know, the only time the bullishness is going to be upset is if we were to respect this. You know, the lack of respect there shows that sells are not interesting right now. And the more likely observation is going to be the buy model. And I'm not willing to take a trade early on within this buy model simply because of the things that are underlying. So I would need to see price get up into the second stage, and then we could try to see if one of my models will fit up in there. Right, so today's just been one of those patient days given the huge run. Kind of showcased what my behavior is and how I think when we see something like this. I never think let's hurry up and take a short or take a buy or I'm going to miss a move. It won't happen. I'm not exciting in that way. I'm not I'm not like some of these people that like to, gamble, or just chase price to try to say they did something. I have no interest in that. For the last 7 months, we've been doing some spectacular work. So we're not going to mess that up. We're not going to mess that track record up by trying to chase things when there's certain things that are present, that haven't been present pretty much all year. And, we're in a segment of months in the summer months that presents you with harder to trade environments. All right. So you got to keep that in mind, right? Right when June started, or towards the end of May, going into the third quarter, you guys that pay attention to ICT on Twitter or X, whatever you want to call it, he said that he's going to take 3 months off. If you've been a student for a couple of years, paying close attention to how he behaves during certain times and what he says during certain moments of the year, the last 2 years, well, 3 years. One, he went to Florida like 3 years ago with his family. I think it was 3 years ago or last year he did this. But he did that and took his whole family away for 3 months like he kind of did recently. He hasn't been back since he said he was going to be away for 3 months, right? And it's ironically going into the 3 months that he always does this on. He always separates himself during the summer months. He calls it the summer doldrums, whatever the hell that means, right? But he's essentially trying to encapsulate the idea that these parts of the year, seasonally, they're harder to trade. You may have noticed, okay? There's a lot of people that I watch that have been struggling. There's some students that have been struggling, and I'm very vocal about, what the conditions are. And, when you see how ICT behaves during certain moments, like when he chooses to go away for a specific month, or like towards the end of the year, why does he not trade in December, January, and comes back in February? Why is that? Right? Well, if you go and evaluate your own performance, if you go and look at price delivery in December and some of the other, like the summer months and January, and you compare it to times when things are, rapidly moving, like the start of the month, out like from February up until the summer months, the comparison is insane. It's literally insane. The cleanliness in terms of price delivery is so different. The whole year has a power of 3 delivery also, for those that don't know. Okay. I have that shared in my free Discord, but I talk about all that stuff deeply in my private group. But you got to think about that, right? Because power 3, there's consolidation, manipulation, and distribution. If that happens on the lower time frames, and ICT has said it happens on the grand scheme of things, like the yearly view, you got to look at your year through that lens. And some parts of the month or some parts of the year, using seasonality and just that perspective of power 3, you can start to understand how some parts of the year are harder to trade and why you need to be able to dynamically adjust your risk. Okay, you can't just risk it all on every trade. You can't just trade every environment like it's a trending environment, especially when we enter months like I've just mentioned that are a bit more difficult. September is also one of those months as well, because that's when we're transitioning into a new quarter. June going into the summer months. For one, it's the summer months, but it's also June is the month that starts the third quarter, which we've seen. And then, early on, like beyond December going into February, that's just a bunch of holidays and stuff like that. So these things are underlying, and most traders don't understand these things because they're so focused on, let me get an entry. Okay. Like who's giving out signals, right? That's what they focus on, but that's why they fail. That's why they fall on their face. And it's the same with those people giving signals. Most of them aren't really, unless you're like Turbo or, some of the traders that prove themselves like we do here, like ICT himself, like Jade Cap, like, some of these big names that actually have evidence that they're like effective. Unless it's them, everybody else should not be listened to, because most of them don't know what the hell they're talking about. Okay, most of them are liars. They can't come out and do what we do on a daily basis for the last 3 years, and this year on YouTube for the last 7 months, hitting 80+% live. Okay. And so, to be able to perform that way, first of all, your sphere of influence, like I said, needs to be very cultivated properly, like listening to the right people. But you also need to know how to behave during certain moments of the year. Oh, nice. Nice. You came here from my boy Turbo, for sure. Appreciate you coming in and checking out what we do. But yeah, you got to be very cautious of, certain circumstances in the market, certain months, seasonally, right? You got to pay attention to some of the things ICT talks about in terms of, like when times are going to be more difficult, seasonality, COT, those things are important, understanding that every single time frame has a power 3, including the yearly candle. It's vitally important. I called the start of the year as a very strong downtrend, right? Thinking of the manipulation to start the year. I picked the low of this year. If you go back to February and March, or sometime in May, I believe, is when the tariffs were being talked about, and Trump kind of cut down the power of them, I guess, for like a certain amount of time, and price shot up. If you go to the yearly chart, you see that the low of the year so far was at a yearly order block that I called out. Thinking from the context of power 3 and understanding how each month or each quarter works inside the yearly power 3, right? And then of course, what we're going through here in the summer months, right? We've had an adjustment in how we behave. But in order to be effective as a trader long term and have longevity, you have to have these things in order. You have to understand these things. 99% of people are hit and miss. Most people can't come out here for months on end and really be able to show you consistency. A lot of it is not true. Unless, of course, you're Turbo or any of the others that I mentioned, including myself, JCap, so on and so forth. You could start to tell when you hang around people that know what's going on, you could start to really weed out who knows what they're talking about and who doesn't know. But for the newer traders, the ones that don't know, you get caught, right, in this lens of trading that's not true, and then issues arise. And then later on, as you experience traders that know what they're talking about, as you experience the subjects that we point you to, you start to see how important certain elements are, and how uneducated most people are when it comes to this industry. Like today, I talked about something that I haven't talked about publicly, like my behavior when there's a huge displacement that takes place. You don't go in there trying to chase price. There's continuations taking place in every price leg. So you may miss the initial move. But as price is printing, right, creating the price leg, on these lower time frames, if you have a higher time frame objective, as it's moving towards that level, just think of your model, right? Think of the YouTube model 2022. Think of breakers. Think of whatever it is that you use to get in. Within the price leg, it will show up again. But if you're worried about chasing price, if you're worried about, or if you took a loss or something and you're just so concerned about the loss, or any of these other things that are distracting, you're not going to be able to see this little phenomenon, right? Or some, there's many, many things like this that are extremely powerful for you to implement. So, there's a little bit more of a understanding that's needed for some of these things, but that's part of the stuff that I teach here. Clarity. And many, again, like I said, many traders that know what they're doing, they're going to teach you these types of things as well. Or a variation of them. So again, for those that weren't here early on, when we saw this huge delivery to the downside, we were not thinking, let's try to get in. I called this London's low real time. I talked about this stuff. I personally didn't execute because it was outside of my rules. Part of the rules that I employ have to do with me not taking an execution at the open. Right at the open, it's not happening. I'm going to let some time pass. I'm going to let price print. Okay, I'm going to let it speak to us so we understand what we're dealing with. And of course, everything is encapsulated from that higher time frame view. All right. And of course, we're watching other factors like intermarket relationships and the news and what's ahead. There was a news event at 5 o'clock or 5:30 this morning, a.m. Pacific Standard Time. It didn't do much, right? So it lagged out. And then once the open came, that's when the real volatility kicked in. All right. And then, of course, the other news came in. And what do you know? Price set a low at a daily wick midpoint. Right. If we go to the daily chart, we see this whole entire reversal that took place simply looked to target the middle portion. And then it set a low there and then came back above this fair value gap. So what this is telling me currently, it's telling us that we're still respecting the bullish PD arrays. Nothing has changed overall. Okay? It's just simply, accumulating orders down here. The only way that we change our opinion of this higher time frame delivery, going from bullish to bearishness, is if it was to start respecting things like this potential bearish breaker, right? If it was to break down below 3 PD arrays that we can observe from this higher time frame chart. Otherwise, it's going to continue regardless of whether you see a rejection like this. So keeping that stuff in mind, you can kind of start to understand why I didn't chase this. Okay? I didn't chase this because of, the simple fact that I need to have justification for price to want to give a super strong rejection to the downside going against the buy side delivery. Let's see what he said. That weekly order block on the DXY ended up holding. Yeah, it absolutely did. Right, so you're talking about this order block, right? Again, this was one of our 3 PD arrays that we were watching for DXY. Fair value gap, bearish order block, and the swing high, and then the middle portion of the wick. Do you see the bodies holding that? I bet you so many people, with this happening, with price going higher the last couple, 2 weeks, going on 3 weeks, a lot of people were probably thinking it's going to be bullish. Oh, the low's been tapped, right? We've set the low, blah, blah, blah. But while we've been over here watching how price has been respecting these 3 PD arrays. So this rejection in here has kept our opinion for the downside. Okay, we've been kind of trying to observe whether it was going to hold these levels up here and go higher, or if it was going to do this because it was a pretty strong rejection. But nonetheless, the rules are the rules. This higher time frame chart has a 3 PD arrays holding. So what happened? Price continued to hold to the downside on that daily and weekly chart. And hopefully you could see how that's helpful when you're on the lower time frame, and then you see something like this take place. This probably fooled hella people. Okay, they probably got stopped out. They're probably chasing price. They probably weren't able to identify that this was going to be a potential turning point to retrace and target this high, which I called out. Right, and then of course the opportunity for that was here. Okay, and up until this point, right, we've been watching this breaker I've been talking about for the whole session, and it has not delivered to support a sell side delivery. So what does that mean? That means we're currently inside of this potentially being a market maker buy model, and this potentially setting the low of the week. Or it could just be range bound given the fact that we have a rate announcement coming very soon, and we're towards the end of the month. Okay, the end of the month caps the monthly range. So the week or the last 10 days of the month, a lot of times it can either go against what's happened in the month, or if there's a reason, right, like a crazy news event, it could just continue to rampage towards what it's been doing already. In this case it's been bullish. Right, but yeah, hopefully that makes sense. Do you guys have any questions? Those of you that came here from my boy Turbo, I'm more than happy to answer any questions. I go live twice a week here on YouTube, 6 days a week in my private group. But there's a lot that I share here on YouTube that complements anything that you were learning with Turbo. Turbo's an amazing teacher. He's an amazing individual. So I appreciate him recommending y'all to come and check out what we got going on. He's one of the handful of people that I would definitely vouch for. So props to him. Yeah, if y'all have any questions about anything, I'm more than happy to help. So just let me know. And yeah, we could still see that the dollar is just giving a nice smash lower. This is making me feel like this was all just to fill in the rest of this fair value gap. Just simply return back down to then sweep out this liquidity to put it on the other side of smart money buy positions that may continue in the near future. Okay, let's see. So I always struggle on days where a huge displacement happens at the open and I don't get in. Oh, I'm grateful that you hopped onto this call because that's exactly what happened today. I end up taking a bunch of losing counter trend trades afterwards. So let's put this into perspective, right? So today, right, we came into today considering that, since we were up here, right, since price was, really aggressively presenting us with the delivery up here after we've, kind of messed around all week, it looked like this was just going to continue to support buy side given the higher time frame analysis and the other underlying factors like bearish DXY. So we came into the day thinking that, or assuming that, once we get up above here, this will be a bullish breaker. And then once it trades into there, we could then utilize a lower time frame opportunity below some short-term liquidity to then look to target this upper level in these highs, maybe even eventually up to here if it got excited to do so. Well, that didn't happen, right? As we allowed price to print, right, once the news came, once the 6:30 open came, price ended up declining through this, which put my attention down to the London's low. I still didn't execute in here given the fact that there was a news event coming a little bit later around 7 a.m. Pacific Standard Time. So all through this, I didn't take a trade. And we're comfortable with not taking a trade. And you have to understand why that is. Why should you feel comfortable? Let me make the argument for you to make to yourself, right? Being upset about missing a trade or missing a trade that, that already went, or one that's not your model. First of all, it's like being mad or upset, like as if a bus stop is never going to bring another bus. Okay. A lot of the times we get very upset that we miss a move and go in trying to take the trades, not trying to miss a move because our expectations are way out of alignment. Okay. If you miss a trade or don't take a trade today or don't take a trade tomorrow or next week or next month, in the grand scheme of things, if you're here long term, it's not going to mean nothing. So you're essentially putting this aggressive negativity into your mind for literally no reason. You don't have to trade every day to be successful, right? It's not like a normal job. Maybe you've heard this before, right? But it's sincerely true. It's not like a normal job. You can take the whole week and not take a trade. This week, I haven't taken one trade. But I know for a fact that within the next couple of days, there will be something that lines up better for me. And that one trade is going to fix the feeling of missing out, All right, let me see. I'm not upset about missing the trade. It's just that I lose a lot of counter trend trades like today. So let me ask you this. The counter trend, do you understand or have a model that trades counter trend? Or are you just assuming that, okay, it's probably going to reverse, so let me try to get in assuming that it might reverse? Right? Do you have a framework surrounding counter trend trading? Because that's a model in itself. There's trend trading, and then there's counter trend trading. Right? So if you don't have a structured process on how to engage counter trend trading, if you were my student, I would tell you don't have the authority to take that trade if you're going to follow my rules until we get to that point, right? So yeah, if you don't have an organized, structured, like where should it reverse, right? What should set up or be the catalyst to the counter trend trade, right? Would you have an explanation for that, or just like or is it kind of like a scenario where you're just like seeing it extend, right? Seeing the expansion take place, and you have the thought like, okay, it's just overextended. It should retrace sometime soon, right? Okay, let me see. You said I took a long at the daily buy side imbalance in the wick on the daily chart 50%, and it hit, and I saw A 1 minute inversion fair value. I'm assuming the inversion fair value gap is your model. It re-swept the low and took me out. Yeah, so yeah, you got taken out in here. You got taken out in here. Right? So you probably, wait, let me go down to the 30 second. You probably saw something right in here, right? There's no shift in market structure whatsoever in here, right? So that's one problem. If you would have waited, that same logic, if you would have just waited a little bit longer, okay, and then used it after a shift in market structure took place, supporting the inversion fair value gap as a retracement to target this high, just waiting a little bit would have had you a lot more in the right. So that perspective, like the outline that you just gave me for where you were anticipating the counter trend move to manifest, there's nothing wrong with that. That's right on the money. Because opposing PD arrays, like if for example, this was declining bearish, opposing PD arrays like the daily wick or a fair value gap or a bullish order block in a downtrend on the higher time frame, those are areas or places that a catalyst can form for a retracement to take place. But it's very important that you can identify, the right timing, right? And this was kind of, just a stop out. Given the fact that price came back above this, right? If you were not too concerned about the loss, which if you spend time here, you're not going to be concerned about the losses because, we talk about that continuously. It's one of the most talked about topics, how to overcome the feeling of, missing out or dealing with losses and all that. But if you would have been able to just give yourself some grace, okay, because taking a loss is not the end of the world, first of all. And if you didn't over leverage and over trade, which I recommend you only take 1 to 2 trades a day, but if you follow that set of rules and you just understand that losses are like giving a loan, or losses are like a slingshot, right? You're pulling yourself back a little bit and then eventually you'll shoot back towards the all-time highs in your equity if you follow the rules and don't do any over trading and over leveraging, right? If you follow that stuff and we're able to calibrate your mindset to be calm and still support your opinion that this was going to be an inversion fair value gap, you would have been able to, potentially participate in here. There's also a YouTube model opportunity in here that I pointed out as we hit this, as price was moving up to this high, because this is a move that, we talked about this morning, right? I didn't execute it, right? I've been very pulled back and, calm, just observing price. But this was a YouTube model opportunity in here, right? It's a potential inversion within this one as well, right? Take this, drag it out. There's our shift in market structure that could have solidified this as an inversion as well. Sometimes, depending on the variation of inversion you use, right? Because there's different ways that people use the inversion fair value gap. But for me, right, I like to see a displacement that supports this, right? Because especially with the higher time frame PD array, if I'm counter trend trading, I like to see this displacement shift market structure at least a little bit, right? That's in conjunction with this overlapping inversion fair value gap. Because look what it does. It positions you a little better. Maybe it looks a little different if you're on the 1 minute, right? You see the inversion here. Okay, well, if you're comfortable with using the seconds chart and the lower time frames, as long as it doesn't make you lose sight of what the higher time frame is doing, if you do drop down there, you could start to see that context, and you could use the displacement once more, right? When it shifts market structure but doesn't move too far away from that inversion, maybe you can add that to a further confirmation for you the next time, because that'll prevent you from this type of thing happening. Maybe not all the time, but more often than not, waiting for this type of sequence to take place. Within the context of what you outlined, it'll be a lot more fruitful for you, I feel like. Right? But again, going back to your initial statement, you get very concerned. Here, let me actually do this. Yeah, what we do here and what Turbo does, we very much complement each other. Okay, like his style's a little bit different. He uses certain models that maybe I don't use, but there's elements that overlap all throughout the different styles. Having, because I also say this to everyone. I encourage you to have a very tight sphere of influence. So if you have a main mentor, you want to get most of your opinions and stuff that you're learning about trading from that main mentor. Like Turbo, he's amazing. Okay. So if he's like, if his models and the things that he teaches, you want to stick to a lot of the stuff he teaches. But again, the good thing is about, us two as mentors here on YouTube, we overlap because we sincerely are ICT purists, and a lot of the things that we incorporate or the things that we use, again, it's a lot of overlap, so like I said, I very much encourage you to keep your sphere of influence very small, because if you have someone that's using like 1,000 different things, and then you come to ICT's concepts, and then you got maybe an indicator from like normal retail logic and all these different opinions, or maybe there's a swing trader and you're a day trader and you're studying from day trade, you could kind of see how it gets real messed up and you'll lose yourself, so the good thing is when you have someone like me and Turbo, regardless of who you're learning from, we overlap tremendously because the simple fact that we are ICT purists. He used market maker models, I use market maker models, right? We haven't really, I'm not sure if we use the same validation, invalidation, but maybe we'll have that conversation on the back end and see if we can benefit both communities. But again, nonetheless, you spending time here will not go against anything that's taught through Turbo, okay? And vice versa, right? Anyone that learns from me, if you go and, see how he teaches and some of the stuff he talks about, like one of my students, Maddie, knows who Turbo is. He's in my private group. He clearly looks at what he says too, and there's never really much conflict. So you want to keep that in mind, just some advice about mentors and kind of just the benefit of, having me and Turbo, so you can kind of bounce around from, both of our contents, both of our live calls. I go live twice a week. Sundays, we do a weekly prep to get a feel for what's happening. And then of course, Tuesday I got my live calls, but then every single day I'm live in my private group. But yeah, so anything we talk about, it won't have a conflict. So it's definitely a worthwhile endeavor to see what both of us have to say. It's like it's a dynamic duo, that's for sure. But yeah, so again, just going back to what you were mentioning initially about being upset about missing trades when you see displacement, you got to start really submitting to the fact that just because there's a displacement, and just because maybe it'll take you 1 or 2 or 3 more days to be able to accomplish a goal or get a profitable trade, don't let that eat you inside. Because that's what the market's rules are. You're either going to work with the rules that you place on the market that work within the ICT concepts that you employ, or you're going to go with what the market's rules are, which are chasing trades, over trading, being reckless, being overly upset about losses because you think it'll never happen again, or whatever reason there is that's justifying the upset feeling if you miss a move or see a big move like this, because it's exhilarating, to see this type of stuff, and it's great to be part of it. But you want to submit to the fact that you don't need that. You don't have to be part of this. I teach here on this YouTube channel and in my private group, similar to how ICT teaches with the, bare minimum, right? The 5 to 10 points, or the, 20 to 30 points in the Nasdaq. You accomplish that, you can graduate from that later on. But if you accomplish that, you can quit a job. You accomplish that, you can have a side income that's reliable, as long as you don't overtrade and over leverage. Any style of trading that you do, if you take more than 1 to 2 trades a day, and you haven't practiced not doing that, if you take more, it's going to be a problem. But again, if you practice breaking that down, maybe you have over trading issues, over leveraging issues, those two things are combated by having those strict rules of 1 to 2 trades a day and just never over trading and never over leveraging. Max, if you follow those rules, you'll have 10 trades that you're able to take maximum, preferably less, because if you're profitable, at least a reasonable amount, 0.5%, 1% per week, you should just stop for the week, come back later. Use the rest of the time to study and recuperate the mental capital that was spent on whatever you did. And this is especially true when you take losses. You notice if you, whether you spend time with Turbo or Jade Cap or anyone else that proves what they do. And here for the last 7 months, we've been proving it live consistently, like 88%. Like every single day, there's something to engage. Except sometimes there's certain rules that make it so we won't. But if you spend enough time around this type of resource, you see that every single day there's something to make an argument about. And once you have the experience, once you have the right perspective, which is given through a good mentor or your own experiences over time, through trial and error. Mentors are obviously quicker because you get a fast track understanding of certain things. But once you spend time, looking over that type of stuff and doing it on your own and applying the rules that you see are effective with the mentor, you start to realize that, you don't have to worry about missing trades. There's always going to be something there, and again, most of the time, the feeling of being upset about missing trades comes from expectations. What is your expectation? To make 10% in a month, every month? Like as a trader that maybe has less than 3 years experience? Is it to double your account every 2 months, every month? Although it's doable when you have the skill set. For a trader that has less than 3 years experience, it's not reasonable. It's not a popular opinion because everyone wants to sell this huge dream. But it's just not realistic, until you get the skill set, until you're able to risk, enough to make that a possibility and be safe about it and still manage risk properly. Don't put that type of stress on yourself. Most of the masses are doing that. And then what does it lead to? Overtrading, over leveraging, blowing accounts, constantly resetting their funded account, constantly doing this, constantly doing that, feeling negative, thinking they're going to be failures, thinking it'll never work. All this stuff is invited by having an insane level of expectation, by having a minuscule amount of experience. And part of the blame has to be, a lot of the people outside of the ones that I've mentioned, and just the trading industry as a whole. They want you to follow the market's rules. Overtrade and over leverage. Be negative when you take a loss. Think about every single transaction as a life or death scenario. That's what they want you to do. Do you want to live by the market's rules? Or do you want to paint the rules? Because if you think about it, the professionals don't overtrade. The professionals don't over leverage unless, there's a viable reason to do so. And even if they do go outside the rules, the thing that protects them is the fact that they're not worried about each transaction. They're not worried about 1, 2, or 3 trades. They're worried about a set of trades, like 10 trades. How is their performance at the end of the week? How is their performance at the end of the month? The end of the year? Not every single little fluctuation. You know what I mean? And that considering what I've just said, like that perspective, maybe you'll be able to twist it into a more customized way to make it make sense to you. But the salient points hopefully make sense and can help you. Because when it comes to losses, that's one of the things that I talk about the most with my students. Dealing with the losses, because I've taken losses on live. I've taken multiple losses in a week. I've lost, went into drawdown, and because I have an understanding of what I've just mentioned, and we set up processes around mental management and overall risk principles that are non-negotiable, we never have to worry about blowing our account, worrying about the next trade. It becomes something that you used to do when you have the right perspective and you understand the reality of the equation. So he said, for the past 2 months, I was so consistent on demo. Okay. Let me ask you this. When you were consistent on demo, were you following a strict set of rules within your guidelines of your model? Do you think some of them got lucky? You gotta be honest now. And then I'll talk about the lost situation. So when you got that string of, this is another topic that I talk about all the time. A lot of my students that are here that are in my private group that have been with me for a long time, managing the highs and lows. We have a process for that. You know what I mean? And a perspective that has to change. Oh yeah, all models are based on logic and rules. But you could say that you have your model well organized, well defined. Maybe it's a model that Turbo uses, or just ICT himself, right? You have every single model or every single piece of the model outlined, and every execution 100% was in alignment with that. This is like one part of my response. Okay, just want to get that understood real quick. Would you say that's a true statement, that everything was followed to the maximum while you were on demo, passing the or before you took the evaluation? And there's the reason I'm not paying close attention to the chart and not really talking about anything in here, and I'm focusing more on you guys, because you guys are more important, first of all. But there's nothing going on. Do you see anything in here that is screaming like, I'm missing something? Right? No, there's nothing. Which is typical when you see a huge run like this. So it's kind of exhausted the range for the day. So that's why I'm not really paying too much attention. All right, we'll get back to it if there's something to do. You said for the most part, yes. So define for the most part. Was there any gray areas that maybe you bent the rules a little bit, right? This is very important, right? Because every single behavior and action you do in the market, everything that you allow yourself to do, every piece of content that you allow yourself to absorb, like every piece of your sphere of influence, all of that is going to have a subconscious impact on whether you could follow the rules or are building the right habits. Also, how you trade in demo. Are you over trading and over leveraging? Are you breaking any rules when you're trading demo? It will become a habit without you knowing. And then when it's game time, when it's time to really get into this battlefield and survive, let alone become profitable, those bad habits will slip in subconsciously, and you won't know why. And then you'll do it over and over again, and you'll think, man, why can't I just follow the rules? Why can't I just do what got me profitable in demo when I'm live? And it'll be because of those small things that we allowed, we gave a pass, bleeding over into our real-time delivery. Because when everything's on the line, when it's time to make money and realize your goals and dreams and reasons you're trying to trade, that pressure will put in the bad habits. So that's the thing. You got to make processes around fixing these things, right? So that's why I'm kind of like pressing on the situation as far as whether you followed your rules 100%, didn't deviate at all, because that's what it's required. Because once you stop using your rules, you're not following the market's rules. And if it's up to the market, this is a zero-sum game. You're going to make no money. You're going to blow your account. And that's just the way it is. That's how it's been built. That's how it's coded. That's how everything operates. That's why there's stop hunts the way they are. That's why there's these huge displacements that then translate into little to nothing taking place. Because everybody and their mama was probably trying to chase this. Everyone that chased the sells down here thinking that they're going to miss something got stopped out. Right? There's many scenarios where psychology is being used against us. You said, Ziad said, can we incorporate candle science on the higher time frames when swing points are not clear? What's candle science? I've never heard of that before. Maybe if you can give me an explanation of what that is. So all of those days were also really good. Yeah. Okay, that's a good statement too, because conditions change at times, which is even more important that you follow your rules and have a plan for when things change and how to identify it, which I teach here. Now, when bad market conditions appear, I can't control and start doing bad habits. So it seems like there's not a lot of planning for negative things happening. It's like, okay, things are going good, and then we get blinded by the positive results, and then it gets so one-sided to the point that we're like, all right, I know what's happening. I'm doing very well. We're on top of the world, right? So it's like the management of the highs is looking like it's a weakness in your trading right now. Okay, so there has to be a conversation that has to do with managing the highs and managing the lows. What amount of, here, this is a good example I give my students, right? What amount of trades is it going to take, like one in a row, right? Like how many trades is it going to take for you to win in a row for you to be on a high, right? Is it 2 trades? Is it 1? Is it 5? Is it 10? Right? Is it 3? Whatever that number is, you have to write that down. And then you want to make sure you describe this, right? So when you hit that level that you've identified that puts you on a high, you want to make sure that you have a plan, right? So once you hit that level, what are you doing to preserve capital? Because that's the main goal once you hit a high. Okay, you got to preserve capital, because if you lose it, the downward spiral starts, and then you fall into bad habits again. So this is planning for losses taking place. I plan for my losers. That's why when I take a loss, I don't give a shit. Okay. Because I take it and I'm like, okay, whatever. It's part of the situation. I just came off of a nice streak, and now we have to deal with the management of the downside now. Because just like how the market moves up and down, your equity curve is going to do the same thing. So the worst thing you could do is get on a high, not know how to manage it, and then continue to be on that spiral back and forth to highs to lows, to highs to lows, basically in consolidation, in your mindset. Ziad, if you are using anything that has to do with retail trading, normal retail logic, I'm going to ask you to please disregard all of it. If you have any indicators, if you have any, anything that has to do with normal traditional retail stuff, we use that against them. What they see in price, we see the opposite. And if you're learning this, those concepts are going to conflict. And no candles, like candlestick patterns, other than indecision candles, which are dojis, right? It's just showing that price is indecisive. Or like the big engulfing candles, right? Which generally create fair value gaps, are important when it comes to candle patterns, traditional candle patterns. Otherwise, we're using PD arrays. So yeah, like candle collision in relation to previous candle. You said candle science. I mean, I guess it's kind of the way that I would view what you're describing there has to do with how each daily range or daily candle relates to the other. And from that lens, we just look at it as liquidity, right? Like PD arrays and liquidity. Previous day's highs and lows, previous week's highs and lows, imbalances, order blocks, equal highs and lows, London's highs and lows, right? Like all that stuff is vitally important when we're trying to navigate the candle to candle price delivery. And then of course power 3 and all that. But yeah, candle science, if anything is called candle science that you're learning from somebody, CRT, I think I've heard that from someone that's yet again trying to discredit ICT, trying to rename nonsense. You know what I mean? Like anything that looks like ICT's concepts and is named something different than what ICT has taught, run away from them. They have no integrity, and they are probably not going to teach you the exact way of using ICT's concepts properly because they're trying to make a name for themselves. So if you're here with me, part of the reason I'm on YouTube is to try to help people not get fooled by these dumbasses on social media. There's so many idiots that take like maybe some people like to make their own business and whatnot. I have nothing against it, but when it comes to new students and students that are trying to learn, it pisses me off because I was victimized by very similar things. I was in something when I first started called IML, like the pyramid scheme BS. I'm grateful that I had the opportunity, but they kind of played me, right? And they were teaching ICT concepts, calling it different names. And then once I figured out ICT is the source, I was like, man, I've been played this whole time, spent thousands of dollars when I could have just joined ICT stuff. And then what do you know, I ended up doing that and then never looked back, so it was the best decision I made. It took me a year to find ICT. I found him 6 months in, thought he was too complicated because I was convinced by these dumbasses that wanted to discredit him. And then once I figured out they were liars and ICT was the source and put effort into learning it, I realized that this is where I needed to be. and I found a home here in ICT Concepts. You know, and you know, I don't know why people got to rename stuff. You know, you could just simply say, I learned from ICT, and this is how I use it. Because the great thing about ICT's concepts, which most people don't realize, he gives you the ability to learn and create your own system within his systems, right? Like not like me and Turbo trade differently. We trade very similar concepts. So would you say that both of us have a different system of trading? I would say yeah, right? Some of the stuff overlaps, but we have a different system. And that's just a beautiful description or a beautiful depiction of, you know, the abilities that we are given as ICT traders. And it's why it makes no sense why people rename his stuff, other than the fact that they have zero integrity and they're so egotistical that they want to just create their own stuff and say, hey, this is my, you know, whatever system, when it's really just a breaker or really just a market maker model or really just an order block or something. You know, and of course, this is my opinion, right? You don't have to agree, you know, but this is just how I view things because, I don't know. This stuff really, really changed my life, and it's kind of hard to hear or see people be knockoffs and then not credit him, but then talk shit about him in the same coin. He kind of invites that type of energy, obviously, just because of his way of marketing. You know, where there's smoke, there's fire. So go around causing a lot of smoke, so then people come and check out what the fire is, right? What's smoking over here? They come and they you know, when they come and see, they see that it's unrivaled, amazing, you know, ocean of students that are just absolutely crushing it, aside from ICT himself. You know, so yeah, that's kind of my opinion on things that are outside of ICT concepts. I say the same thing every time a concept that I know has been a ripoff of ICT is mentioned. You know, so again, if some of the stuff is working for you, I encourage you to try to get away from it. But at the same time, I don't want to derail you. You know, and I'm pretty sure that any concept you bring to me that's been a ripoff of ICT, I can tell you the exact model or sequence of events that's being mentioned and renamed. So I can't remember exactly what CRT is. I think it has to do with a knockoff situation that has to do with Power 3. Okay? Like they're trying to just rename it. Candle range theory, I think that's what it's called. Right? Is that what that is? CRT? Yeah, it's a daily, weekly range and Power 3 knockoff. Because daily, weekly ranges and Power 3 is literally teaching you how the candles are forming on every time frame. And then the lower time frame that you go, it tells you the details of those higher time frames and the logic that's used to create those candles. And Power 3 is something I talk about constantly. You know, I talk about, you know, I don't talk about every concept, but I talk about most. But yeah, let's, hopefully I cleared some of that up. Let me actually go back to the student con that I was talking about earlier, or talking to earlier. But, I forgot what I left off on when I was, I got distracted by it because I literally can't stand the renaming of ICT's concepts. It's so, I don't know. It's annoying. I can't stand it. And I know that type of stuff hurt me before. So I have a special place in my heart for people that are somewhat becoming victims of that. It works for some people, but most it doesn't. And they lie about their testimonials. It's a lot of fake nonsense. But yeah, Con, I hope that what I was talking about in terms of not worrying about losses, and you know, I promise you too, if you spend more time here in this community and you kind of see how I talk about things, sometimes it's boring, right? Like today, it was pretty boring. Okay, but that's the thing. That's what trading should be. It shouldn't be exciting every 5 minutes. You know, we're here clicking buttons trying to anticipate where price is going. I don't think it's boring. I could sit here all day and have a blast. Okay, like, because I love this. This is my life. You know, it's been my life for the last 3.5 years. You know, so, you know, some people are doing it, you know, part-time or, you know, have things that they want to overcome. And obviously that encourages, you know, things to hurry up a little bit. But that exact mindset is, again, playing by the market's rules. This requires a lot of time and patience, and taking losses is one thing that gets worked out over time. But again, having the right perspective, right? People that talk about losses in the proper way and how to deal with them, and how to deal with conditions that change, like consolidation, planning for these types of things to take place, how to manage the highs and lows. I think that's what I left off on when I was talking about some of the stuff. These are very important things that you got to consider. And they're not the flashy, shiny things that sell courses, you know. But those that want to learn, you know, it should be exactly what you're looking to hear, you know. Because these are things that are not at the surface. These are deep, deep down elements that most mentors don't want to talk about, unless you're in the sphere of influence of, you know, some of the people that I've mentioned, you know. Because not everyone understands the reality of trading, you know. And when it comes to risk, not many mentors know the realities of live trading. They don't understand, like if they're over leveraging, doing a bunch of crazy amounts, like and things are just looking unbelievable. Most of the time, if they're claiming that they're trading real contracts, and especially if they're trading inside of like a news event or something, they're lying. You know, first of all, a broker, and with a regular broker, there's fees. Okay, you have to claim on your taxes, right? You have to do all these different things, and liquidity is not present in a demo account. So if we're trying to like take a trade before or during a news event that's dramatic, if you can execute it in a demo, that doesn't mean that you'll get that fill or that position allowed in a actual account that has real liquidity, with real money being transacted and orders being paired on both sides, because there has to be a winner and loser, right? Especially through heavy manipulation. Most of the time, the slippage, or the slippage on those types of moves will be ridiculous. If you took an execution up here and there was like an NFP announcement or FOMC or a rate announcement or a Fed speech or any of the other crazy news events, if you took an execution in here expecting things to deliver just like it did on a demo account where there's no liquidity, you're not going to get that fill. The market makers, right, or the people that engineer the trade, right, for both sides, and whatever their title is, right, they're not going to allow that. They just won't. Okay, and if you trade live, you'll notice this very quickly. I noticed it very quickly my first month when I was trading live for the first time in a real account, not a funded account, a real broker account. It is ridiculous. You'll go from demo trading, being able to catch the highs and do all this in a crazy environment, catch the news and zero slippage. You'll get into a real account and there's these risks that you have to pay attention to. If you're too good, this was happening to me last year, but luckily the broker I use, they have integrity, so they helped me fix the problem. Because I went on a big streak of wins back in September of last year, like right before September, up until November 6th. And there, as we got into November, which is a month that I generally close out my trading in, off of the win streak, I was taking executions in my regular personal live account. And I was in a trade that was up like $4,000, right? And it was moving. And I was like, oh, great. All right, well, I think I'm going to close it. It came back also to like $3,000. It started, kind of pushing against me. I was like, all right, well, I'm going to just close the trade. I was luckily recording my screen. If I didn't record it, they wouldn't have justified and fixed the situation. Okay, so I was pushing exit, putting limits, trying to get out of the trade. My stop was thankfully already at the in break even, right? I was a little bit in profit. I think it was like $500 profit. But as I was trying to exit the trade, because it was an NFP day too, right? So NFP just worked out, and it wasn't during the NFP time, but it was off the heels of it. Even if it's just on the day of the news event, this can happen to you, where they're not going to respect you, right? And they're going to try to punish you. They're going to try to play you. ICT's mentioned this too. And unless you've traded live and actually dealt with these types of things and seen how it really is, most people don't know that this is something there, right? That's relevant, right? So most people that are trading on YouTube don't know this. unless they're in that group of people that I've mentioned today to you guys, right? So it's vitally important to have rules around those times, those certain circumstances. It's very important to, again, keep your sphere of influence tight, because you just never know. And if they're trading demo only or only funded accounts, right? And you can't really see, like I've shown the last 3 months, right, of me passing a funded account. And then I'm in the process of, growing up to the first withdrawal of this secondary funded account that I did as a challenge for my group, showcasing the rules that I talk about here continuously. So if they're not able to show you that type of stuff, or at least at a minimum go live and show you live on a regular basis, they're not worth listening to. If they rip off ICT's concepts and rename them, and you could see the fingerprints of ICT, don't listen to them. And if they don't trade with rules, and they tell you to trade during the news, and they, do all this reckless crap that can only be done in a demo account, you don't want to listen to them. And you want to keep this in mind too. If we go back to what Colin was saying earlier, how he had the highs going on, going into trying to trade a funded account. Again, if you can't manage the highs, right, it's going to be difficult. If you have a high off of a demo streak, you need to realize that it's going to be a little different when you're trading live. I've noticed too, I noticed too that when you're trading a futures funded account, right, like Top Step, which is who I go with. I'm not encouraging you to go with any specific people, but if you're in the U.S., you should for sure have a U.S. Funded account, okay? Because anything outside of it, it's you can get banned, and you can have a $60,000 withdrawal, $400K in funding, and the regulations change, and then the rug gets pulled on you, and all your money's gone from that account, and you can't trade in that account anymore because you're banned, because they stopped servicing U.S. traders. That happened to me with FTMO. That exact scenario, exact amount, and it was not fun. It should piss me off so badly. But then Top Step, I talked to some people that work with Top Step, both students and like some of the people that work there. I was actually able to talk to the son of the owner, because he's on social media, right? And he went back and forth with me and convinced me to start with Top Step like a year and a half ago. And I got my first one with them. I normally trade just my personal account, but then recently I did a challenge, right? And passed it there too. So now I got 2. But yeah, so if they don't show these types of things, if they're not transparent like that, stay away from them, But again, you want to plan for the highs and lows. Okay, and if you come off of a demo streak, you want to remember things are potentially going to be a little bit different. Don't make yourself fearful, okay? But just remember, things may be different. The slippage may be there. You may not have as accurate opportunities as you had in demo, because there's actual liquidity being worked on. And don't look at things from a single trade, okay? Look at them from a set of trades. Never overtrade and over leverage, right? 1 to 2 trades a day max, okay? And if you haven't practiced that, practice that. And I'm telling you right now, if you do these things for like a month and change or practice changing your perspective to get comfortable with this stuff, it may feel like you're leaving stuff on the table. It may feel like this or may feel like that. But eventually it's not going to feel that way. And to be a professional, you got to behave in a professional manner as a trader that's professional. Professionals are not over trading and over leveraging. Professionals are not worried about the next trade at all. Okay, they're worried about a set of trades. They're worried about their bottom line after a specific amount of time. End of the week, end of the month, end of a quarter, end of a year. Okay, that is where their priority is. And for us, when we're new and we haven't been exposed to the proper way of thinking, it's very easy to fall into every single opportunity is something that's life or death. When that's not the case, okay? And when you get more wisdom in your trading and more experience, obviously wisdom will come from experience and having the right sphere of influence, like I mentioned earlier. But once you gain the proper perspective and see this stuff work for you and, prove to yourself that the rules that I've just mentioned and any other rules that you implement that are good for your discipline. Once you prove that they work for you, it'll disappear. The feeling of worrying about missing a trade, or, you know, being so concerned about every next trade. Because whether I win or lose today, whether you win or lose today, that's not going to change our life at all. It may be something positive. Maybe you've been struggling for a while and you want that cookie, right? Maybe you want to feel good about it. And that's, you know, maybe part of the reason why the next loss may hurt a little bit, especially if there's been a bit of a struggling point. But in the grand scheme of things, you got to make sure you're paying attention to the reality, you know, and every next trade doesn't matter. How you finish this week is what you should be gauging things on, not day to day. So some of the stuff that I've mentioned here, in terms of dealing with losses and, you know, managing the highs and lows and anything related to that subject, hopefully you've been able to take note and see where you can maybe make adjustments, in your perspective and maybe in your process, you know. And it's going to feel disjointed at first, you know, because of the lack of experience. You know what I mean? Because there's a different perspective from a trader that's been in trading. Like there's different problems for a trader that's been here trading for like 5, 6, 7, 10 years versus a trader that has less than 3 years experience, right? And who knows, that person with less than 3 years experience may not have the right information. They may have been looking at, you know, trend lines, okay? And someone that's just over leveraging on NFP every day, every week, right? Or every NFP, whatever. You know, their perspective is going to taint the proper perspective. Just like how a lot of these people that, you know, give this whole insane lifestyle, Lambo, you know, lifestyle, this and that about trading. And they totally taint the mindset of what's truly required as a trader and what the real lifestyle is as a trader early on. You know, you could live that crazy lifestyle later on if you do things properly and give yourself time, but it's not going to come in 2 years. You know, it's not going to come in 1 year. It's not going to come in 6 months. You know, some people it takes more. You know, I have a student that, you know, is absolutely destroying the market named Harley. He was here earlier, but he's a freaking superstar. You know, he's made, I think, above $4,000 as a person that's less than 21 years old, been trading for less than a year. You know, just been spending time with me, a couple others that are inside that sphere of influence that I mentioned, and you know, just sticking to the right stuff. You know, and because he's had the right proper mentorship, the right proper mindset instilled into him, and had the hard conversations like, do I need to worry about taking a loss? Right? How do I get over being so worried about the losses? You know, and it's a different circumstance for everybody. But, you know, everyone's journey is different. And depending on the habits you have, depending on what you're willing to sacrifice, what you're willing to change, who you're listening to, right? All those things are going to determine how fast it's going to be for you. You know, but it's not for any student that starts trading or has less than 3 years experience. Do not put crazy expectations on your trading. And try your best to look at the grand scheme of things 5, 10, 15 years from now, with you living in that life that you're aiming for, right? Live there right now, right? But don't worry about today's mistakes. Don't worry about losing a trade. The only way you should worry about day-to-day behavior or actions in the market, whether win or loss, is if you overtrade and overleverage. Because if you overtrade or overleverage and you win, that's a problem. Okay, you need to make sure you have a conversation with yourself so you can ensure that you know that that's not what you should be doing. Because next time it may result in a bad engagement. Right? So win or loss, you need to make sure that you're following the rules. You know, minimize yourself, because the person that you are today that breaks the rules, that, you know, maybe is broken by losses, who thinks about the next trade all the, like with life and death expectations, that trader is not going to be the one that is successful in the future. Okay, so you want to gather this good intelligence, right? This good wisdom that I myself talk about all the time, that many other traders talk about, that are worth listening to in the ICT community. And you want to put that in a bank, right? In a thought bank, right? Get like a piece of paper, right? Or get a private Discord like a category, right, inside that, maybe for journaling that, and start noting all these good perspectives. Because then next time you have a mistake with your perspectives, right, or taking a loss or these things, and you've heard someone talk about it, you could refer to those good perspectives and then reshape your thinking, or start to condition yourself to rethink that way of thinking. Because taking a loss doesn't matter unless you break your rules. Winning doesn't matter unless you break your rules. So technically both shouldn't matter on a day-to-day basis, given what I've just mentioned, right? That's how you desensitize yourself, and just by following your rules. Okay, doing the same thing over and over and over, being organized, having an answer for every different element as a trader, right? And I have a list of things that I require students to think about and make a process for in terms of each subject. And then, explain your process for each subject, okay? And the subcategories that are related to each of the topics. And then once you have a list of those processes and an answer to all those different categories and subjects, you're able to then fully admit to yourself and understand that you know what's going on, and you don't ever have to worry. You can start really working yourself towards that desensitized mindset, And again, it's harder for everybody. Everyone has a different way of thinking about failure and rejection and losses and all these things. Everybody has a different perspective. Everyone's starting from a different point psychologically. I've had a hard upbringing, so I had a lot of crap that I had to build from and overcome and, rewire my mind and the way I think about certain things. Probably a lot more work than a lot of other people have to do that had a good upbringing, but there's positives and negatives for both. Sometimes a good upbringing can make you feel like, you can't do no wrong, and everything's supposed to just be handed to you, but if, and then again, that could lead you to making over trading issues, over leveraging and not listening and not being coachable. And then there's, positives and negatives for a hard upbringing as well. So everyone starts from a different perspective, and so everyone requires a different style of solution, but there's a lot of non-negotiables process-wise that I share here that can be very beneficial to anybody. Doesn't matter your upbringing, but I'll be very blunt, right? I tell you like it is. I'm not here to sell a course. I could care less. Okay. I'm here to attract the people that want to learn, that want to really make this their life, because, I've been able to make it my life, and I've been able to now help lots and lots of people do the same thing. A lot of them are in the chat right now, so yeah, I talk about journaling and stuff too, but hopefully some of the stuff that I've mentioned today, this is like one of many. Obviously there's so much I could talk about in terms of this topic of dealing with losses and overcoming losses and process and being organized and how to have the right mindset. All this stuff's aside from technicals, so this it goes real deep, and we're live every day, right? So I don't want to try to cram too much into this subject, but hopefully you've been able to take away some reasonable perspectives that can help you moving forward. And again, you can just, you can hop on and watch some of my other videos and ask me questions on Instagram. You can follow me at WMG Trading. Just no spaces, no like other characters. Some people are trying to impersonate me because they're scumbags. So just type in WMG Trading. Normal spelling, no spaces. All right, and you can ask me questions there or in the chat, right, or in the comments. Mike, one of my private group students, said, do you think big movements on the market triggers FOMO, over leveraging, chasing, and it's by design? Yeah, Mike, you're absolutely 100% on point with that. It's programmed to weaponize psychology against you, okay? It's not meant for us to come in here and be successful. It's supposed to be a zero-sum game. Unless you're a long-term investor, okay, or some insider that understands the things that we're learning, right? Because all the stuff that ICT talks about is renamed, right? It's renamed in terms of the interworkings of the actual program and programming elements that ICT discovered or was taught by whoever. Okay, so, and none of that can, be given, apparently. Okay, and I've heard a lot of, big traders that are, really involved with Wall Street, right? I've heard a lot of them talk in certain ways that shows evidence without fully saying like, hey, this is like facts, that there's something behind this. But they subliminally say it in ways, and then they try to discredit what ICT teaches. They say, oh, it's not, that's not it, right? It's a ripoff, right? But that's the thing. He made a language to make the programming make sense to like a normal person that's not a computer coder, and so it's very fascinating. You know what I mean? So, it's programmed to weaponize against people's thinking, okay, in all aspects. And yes, the big movements like this are to pull people in, because just think, if we were in here chasing sells, like probably 99% of people did with this huge drop, pretty much every short was stopped out, unless it was like a tiny move that was just like guessing. There's like really no model in there you could have taken. Maybe you could have taken this on the 5-second chart, but are we really trading the 5-second chart to try to demand something? No. There was a couple moves I talked about. I talked about this. I talked about these two moves in here, targeting London's low and all the other things we discussed. But for the most part, this was all to pull people in so it could do this. Do you now see why when I saw this, I just quickly kicked into the mode of, okay, well, they're trying to get me to chase price, so I'm not going to chase price. We're going to observe what price wants to offer us today. And if it offers something, great. If it doesn't, so be it. I'll come back tomorrow. There's a red folder tomorrow. These were yellow folders. Pull up. See? Or no, there's no red folder tomorrow. It's on Thursday. They may, right? It's also the end of the month. So there's the expectation that we had starting this week. If you go back on Sunday and every other like ending of the month, I always talk about lower your expectation, lower your risk. If things are consolidated and you're not very comfortable with executing consolidation, lower your risk, a reason to lower your risk. If there's a crack in correlation between the three indices and the other assets, we look for risk on, risk off analysis. What does that tell you? Lower your risk. When we're on the higher time frame and it's overlapping multiple daily or weekly candles, what does that mean? Lower your risk, because that's all low probability, high resistance delivery. That right there is a very simplistic way to observe what the current condition is. And of course, you can make an argument within those conditions that there's a move here or a move there, right? Because there's always something to make an argument about. But in the grand scheme of things, in the big picture that we like to highlight, is it supportive of something that's easy to trade, or is it hard? Right? Is it going to be a little more difficult, unreliable, and sloppy? Right? If that's the case, you got to lower your risk. And most times in the scenarios like I just painted, that's when the risk is higher. Plus you add the time of the year, like I talked about earlier. There's seasonal influences that push price around. Right? So if you take that stuff into consideration, you could start to see how you can now develop or go about developing a dynamic risk process, which is something we teach here on this YouTube channel in great detail in my private group. That's why we never take massive losses. That's why I've not blown an account in 3.5 years, or maybe 4 now. It was close to the to the 4-year mark, or close to the 2-year mark, where I started getting really, really in tune with ICT's overall stuff and the advanced stuff, and then all the way up to here, to this time when I'm about to be on my 6th year in August 7th. It's been a long time since I've blown an account, and it's attributed to this stuff that I've been mentioning, right? The mindsets being set properly, dealing with the highs and lows, understanding that that's a thing that you got to think about, right? Because winning, you could get blinded, and then you go and do stupid stuff. So you got to be very calm, right? When you see large movements like we saw today, what are you going to do? This is a scenario that happens a lot. If you're not part of the move and you don't feel comfortable getting in, what are you going to do? That was a scenario today. I called out 3 different opportunities that were fruitful. This down here I mentioned, rejecting from here, real time. Going higher, I talked about London's low when we got this breakdown. Okay, so I talked about this and I said this low to that high should be a balanced price range. Came back, shouldn't come too deep into that if it's going to continue to drop. And then it was reaching down for, more sell side. So we called all that before the fact. But in times where you see this, what are you going to do? Do you have a process? Are you going to feel like you're chasing price? If you feel like you're chasing price, the easiest thing to do, don't chase price. Just don't execute. Just hands off, right? Watch what it does. Try to see if you can reason with what's happening so you can understand it. Because if you're so focused on taking an execution, especially when you're learning, or if something like this is taking place and you're kind of like really anxious, if you take an execution, you're going to miss the story of what price is telling you. You're going to and if you get stopped out, you're not going to be able to get in later because, all the thoughts that'll be spinning through your head because of the lack of experience and just the lack of being able to deal with this type of circumstance. Most people don't have this type of detailed planning process about different things that are important because, it's just the way it is, It's an unfortunate reality, So that's why you want to be very cautious of who you allow into your sphere of influence. Mike said, looks like they want us to chase both. Yeah, Mike, for sure. Mike, you've been in my private group for a very short amount of time, but you've seen, this continuously being talked about. Like this type of perspective is very consistent. We're constantly analyzing what the condition is, and then we're talking about how we're going to behave. And what they're trying to do, what liquidity is being used, what it's being, what is it attacking, all these different important elements to help us get in tune with what price is doing and how we should be navigating and thinking about price in the current moment. But yeah, Mike, if you didn't take an execution today and held off like I did and you followed, what we were talking about, that's a win. You didn't chase price. You didn't break your rules. And you, in the moment, were able to submit to that inner conversation, right? And just you submitted and said, okay, I may be, thinking a lot of things. I may be missing something, this and that. But you've been able to practice today not engaging, being okay with not taking a trade. And that action itself is something required to build discipline. Because everybody and their mama probably went in here and tried to take a trade. I said that right when this was happening. I'm like, everybody is going to try to take a short now. And what did we do? We waited. I wanted to see if this was going to be a real drop by getting down below that higher time frame breaker. So, right, we had scenarios that helped us wait. I wanted to see a bigger picture delivery rather than this just possibly setting up something on the higher time frame. I wanted to see it set up on the higher time frame. Then we could engage. And just constantly reminding you guys that there's no need to worry about missing a trade. You spend enough time here, you see every single week there's something that we're able to execute. In my private group, literally every single day there's something we make an argument about. If you were a little bit of an aggressive trader today and you trust me and my judgment and the things that I said, we talked about this here before the fact. I said this will probably hold in here if it's going to continue going lower, and then the target will be London's low. And then if it sweeps that, we'll see if it can get up above the highs. But this displacement, there was a possibility for it to go higher early on, but it started breaking through my levels. So it obviously ended up just declining. This one too, right? You could have used this as long as this was going to be a balanced price range and hold, or an order block, because that's what order blocks and breakers are. They're balanced price ranges. So as long as that was going to hold, it should have held, and it did, right? So we talked about all of that. And again, if you didn't take a trade, you should pat yourself on the back. You shouldn't beat yourself up. You shouldn't think negatively, oh, I missed a trade, I'm never going to do this or never going to do that. That stuff is nonsense. And if you took a loss today, but you followed your rules and didn't take more than 2 losses, and your risk was low because of the overall circumstances, that's a win, you know? And you got to start positively reinforcing losses. If you took a loss, the first thing you say, all right, I took a loss. I just paid to get the right information. Clearly, I'm being told by the market I got to wait, right? So I'm paying for better information. I'll make it back, you know, simply because the evidence is ridiculous. This stuff clearly works, you know, and it's all up to me. You know, as long as I follow the rules, eventually things will work themselves out. If I've proven it in demo, I can do it in real life, real live accounts or funded accounts or whatever. It's just the gap between the mindset, right? The fact that demo is not meaningful, but it is meaningful at the same time, versus live accounts, which are absolutely meaningful because now what you do is going to have an impact on you in real life. So that adjustment takes time, which is why I don't encourage traders to jump. Once they're good in demo, I don't encourage you to jump to a funded account, you know, because there's a learning curve. And if you do jump to a funded account, expect to manage the high that you're on and expect a loss to take place. Expect to possibly blow your first couple accounts, and don't be swayed by it. Just follow the rules that got you to be effective on a demo and try your best over time to submit to that. And again, that's a thing that a mentor can't force you out of. You know, that's something that you have to trust the rules and trust the person you're learning from, and then just continue to, you know, try to just work on things the way that you did in the demo, and keep the right perspective. Constant positive reinforcement. You know, the only time you got to, you know, somewhat attack yourself a little bit is if you break the rules and you know you break the rules. You know, you got to kind of, you know, be hard a little bit. Like, hey, we need to stop doing this stupid stuff. Don't call yourself a bunch of bad names and spend weeks on it. You know, just whenever you have a problem, set rules. Okay? Because those problems will be solved through rules. That's how I fix students' rules or students' problems. I put a reasonable rule in front of the issue, and then they practice that, and then what do you know? The problem disappears. Like they say, Christian, I'm over trading and over leveraging. Okay, if you want my advice and you're willing to listen and you're coachable, you're going to take 1 to 2 trades and that's it. Max 10 trades per week, preferably less. Right? They do that for a couple weeks, couple months. There's no longer any over trading ever again. And they're like, man, you were right. Right? Over trading and over leveraging. Let me tell you this. If you over trade and over leverage and you just continuously fall into that, just know that this is something I'm going to be very blunt about. You will fail. If you always over leverage and you cannot stop, you will fail. And the reason being is, you know, if you over leverage, you're doing more damage to your account than is necessary, than a professional would do. And nobody that over leverages is successful. Some people that over trade are sometimes. Over leveraging is a death nail. Okay, it may seem like it's going to fix the problem quicker. No, that's playing by the market's rules, like I said. So you're either going to play by your rules and be a professional, or you're going to allow the market to think, or to make you think that over trading is how you need to operate within this business. So with that being said, hopefully that just shuts it off completely, because I don't know any traders, even some that have been trading for years, that overtrade and are successful. You know, maybe eventually, you know, once you understand what you're doing and you respect risk and you have money to blow, you know, maybe if you open up a separate account that you're intentionally going to overtrade on and over leverage on to try to double it or whatever, right? You know, that should be the only time you ever think about overtrading. I mean, overtrading or over leveraging. You know, if you're trying to learn how to be disciplined and stop blowing accounts and minimize the overtrading and over leveraging problem, you have to just tell yourself that this stuff is not what successful people do. You know, I proved the rules that I talk about, although some people think they're, you know, a little bit too tight, like 1 to 2 trades a day. Oh, it's making me miss opportunities. Okay, great. Go and overtrade and over leverage. You're going to miss opportunities there too. So if you haven't tried this other thing, which is trading 1 to 2 trades a day, never over trading, but you've been trying this other stuff that's been making you fail, isn't it reasonable to make the adjustment and try the other side, try the other thing? And every person that goes and submits to that, it fixes those problems. Those are the most common issues, and I have a very simple way of fixing it. And sometimes it needs to be told, but then you also need a mentor that's going to hold you accountable. I don't hold back. If my students just continuously break the rules and don't want to listen, I'm going to be super blunt. I'm not here to tell you what you want to hear. I'm here to help you know what you need to hear. Okay, and how I was able to become successful with this and consistent, which I showcase live to prove it on a daily basis. So if you can see yourself doing at least something close to what I'm showing, right? If that would be something eventful to you and worthwhile, then I think it's best to, take some of the things that I'm saying that make sense to you and apply them. Try to fix your problems that you're faced with, and then see if those things don't help. And then if you need more help, more customized approach, then we can always do that as well. And that's more for my private group, right? But I do a little bit of that here too. So yeah, talking about the manipulation and all that falls into everything that we were just talking about, right? It's the manipulation that's programmed into the market makes it even more important that you set up rules, right? Because it's there. We know that this is what's happening. They're weaponizing psychology against you, and they want you to play by their rules. But we don't want to play by their rules because we're trying to succeed. They want us to fail. So we're not going to fall in line with the sheep getting slaughtered. So how do you know when there's going to be a Judas swing and market is going to reverse and go other direction? In today's case, it didn't reverse. It just kept delivering down. Yeah, so sometimes you're not going to be able to fully anticipate it until it gives you more information. Okay, again, that's not something that everybody wants to hear. Everybody wants to, forecast every second of every market of every day, and that's just not realistic. ICT knows that's not realistic. He's mentioned this, as such. So sometimes it's going to require you to have more information. Like today, I explicitly said, I need to see how price is going to behave in here. Are we going to whip above this, drop down, sweep this out, then go higher? Are we going to target the London's low and go higher? Or is it going to just break through that? And then, once it broke through that, we would make an adjustment to that, which we had to do later on, and try to start framing out why price is going to go lower potentially. In the midst of cracks and correlation as well, So ideally, if you're looking to go higher, a rule of thumb, right? You want to look for price to manipulate lower, ideally to a PD array that's below us. And then once price reaches into that, going into the New York session or going into London, depending on what you trade, the indices sometimes have a lagged response through London and then set the higher low of the day during New York session, right? Sometimes it's in London, so you just don't know until you see what price does going into the New York session. All right, but a good rule of thumb, right? You could simply also take Asia, right? And you could get that range, and you can kind of get a rough estimate. There's other more advanced ways of doing this, which I talk about related to some of ICT's advanced day trading projection tools. But you could take like Asia, and you could project it lower, right? Like get the whole range, and then you get a box, right? Copy it, put it down 2 or 3 boxes lower, or 2 or 3 boxes higher, and you can use that as both a projection for power 3, where it's going to manipulate to, depending on what your narrative is. You can also use it as a targeting tactic, right? But if you're trying to figure out like where it could go, because there's a Judas every day, and when there's not a Judas, I am unwilling to most likely take a trade because there's no manipulation. I need manipulation. Why? Because the manipulation is engineering losers. That's the whole purpose of a Judas swing. It's to pull you in, because once it pulls you in, you're on the wrong side, and then they can position themselves to go the other way. When a Judas swing is not available, if you're going off of power 3, the way that you're gonna have to figure out a way to get back in line with it. Which today you saw, I saw some stuff, but I just didn't feel like getting in because it didn't really have a Judas, and it was a lot of trappy vibes going on. And I'm more or less focused on what could potentially be in the future, right? Whether this can change and whether our fundamentals are going to finally show us that we're going to finally get the drop we've been trying to see price engage in, because the euphoria is just ridiculous. Okay. I mean, everybody thinks that the world is just like amazing right now in the indices. Everything is making all-time highs. I'm pretty ecstatic too, because portfolios look pretty nice when this is happening, long-term and short-term, because it's just, one-sided. But we're due, especially with the fundamentals, to pull back, So I was trying to wait and see if that was going to take place. But every single day, you want to look for a Judas swing above some liquidity pool, right? It could be a London's higher low. It could be a Asia's higher low, depending on which direction you're going. I'm kind of just generalizing here and telling you levels to watch. Or you could take Asia, map it out with a box and then project it higher up to 3 times, project it lower up to 3 times, and then kind of get a feel for, where price is headed in that regard. That's kind of what this indicator is doing here. Kind of mapping out different references that ICT talks about aside from the Asia session. These specific areas, it's called central bank dealers range and the flout. Both of them have their own special unique use cases, but it's essentially just encapsulating certain moments in time and giving projections. So if price is going to go lower in terms of a Judas swing, it's going to most likely need to navigate some of this. Either go up to one of those levels to give us a pretty nice Judas, or just break down, or just rip higher, whichever direction it's trying to go. But the manipulation would be anticipated right away. The first thing I think about every day is power 3. Okay, where are we in terms of the daily and weekly range, and what does power 3 look like? And where are the liquidity pools that I just mentioned? Previous days highs and lows, previous months, or previous days highs and lows, previous weeks highs and lows, previous sessions highs and lows, London's high, London's low, right? And then previous AM session and PM session highs and lows. Sometimes those are important as well for targeting. Sometimes if those are like up here and price was going to like drop, sometimes it'll reach up there to take that out as well. I'm not too sure. Not too sure why it's not showing. Oh wait, never mind. I'm tripping. Never mind. This was the projection for today. I was like, wait, it looks a little bit big. But yeah, so those liquidity pools, they're very important. Sometimes the previous week's high and low, because if you think about it, right, every single day, a lot of times there's going to be either a run on the highs that then transitions the candle to be bearish if it's going to be a bearish day, right? Or it could be running down below previous lows if it's going to be bullish from the previous day to sweep up that liquidity inside of a PD array to then go higher for the expansion phase of the candle, right? So power 3 is very, very dynamic when it comes to learning what you should be looking for on a daily basis. And you can't always know when a Judas swing is going to take place. You don't know if it's just going to rip like without manipulating until it does it. So some things you got to wait for. But the thing is, like you mentioned earlier, there's some thoughts of missing moves. So that is a very big weakness. And of course, some of the things that I've mentioned kind of help you, like start working towards fixing that. It's not something that you can fix overnight because you have your beliefs. You have your opinions of how you see the market and what you want to see take place in your career and, what you see in price. But you don't want to always demand things like the Judas swing. You want to expect them every day. And until it doesn't show it to you, you're going to have to just assume that there's going to be one, either in the London session or in the New York session, because if you're trading the indices, it can happen in either one. The whole entire London session can drop. Then we go into the AM session. It could shoot up, take out London's high, and then that could be the manipulation Judas swing to then drop lower. And then it could happen the same way the other way, right? The same scenario could take place. So that's a circumstance that can take place, especially around news events for the indices. So sometimes you just got to wait. You got to get comfortable with just waiting and understanding that you don't have to take a trade every 5 minutes. Right when the session starts, you don't have to take a trade right away. You don't have to, because sometimes you're going to need more information. And the beautiful thing about what it is that we do, right, regardless of what ICT model you utilize, if you could frame out where the narrative's going, and you can also identify that Judas swing or the dynamics of the power 3 and where it's headed, you could simply drop down to the 30-second chart within a framework that you framed on the higher time frame, all the way down to like the 1 hour, the 15. And if you could spot the direction, when price is delivering in that to that target, you could find the models you employ as we're trading towards that level in the form of continuation. Like, for example, if this is going to drop down here and I want to try to catch a short, thinking that the breaker we've been talking about is going to hold, let's just assume we're going to go lower. Okay, and I missed all of this. The only way that I'm going to be able to get back in line is if my model shows up again, right? So if it declines in here, let me give a good example real quick. So this is like a continuation model. Well, not model, because it's the same for every model, right? It's just a continuation perspective, showcasing the fact that there's always something happening. There's always a move taking place, so you don't have to worry about it if you miss a move. Okay, let me... Where the hell is the freaking thing? Oh, there it is. Right, so if we're in a price leg here that's already delivered, okay, in order for me to get into something like this, maybe I would like to see a run up here, because maybe I'd like to see a run on stops, because that's part of my model. Let's just assume that's the case. It is the case, but let's just assume for an example, right? I would need, if I'm going to use the YouTube 2022 model, I would have to see it do this, right? Break down again. Maybe this doesn't deliver to a premium and it just delivers this as a breaker. Okay, cool. Right? If I want to find a model taking place in form of continuation, let me see, can I shoot? I would have to see something like this take place. Either it's going to set up the rules this way, right, in the grand scheme of thing, inside of the downtrend. But if I was to miss this, and then, here, let me take this indicator off for a second. It's kind of in my way. Okay. So this could be a scenario for continuation, even if I missed all this, right? Because we still triggered in the stops, right? And then price offers the rules again, right? Run on stops, shift in market structure again. Hopefully you got a logical target. Hopefully you have a higher time frame PD array. Maybe it's a breaker. Maybe it's a fair value gap up here above these equal highs with a higher time frame on the daily supporting a down delivery, right? But even if you were to miss this, right, and price was to take off, right, I would assume that a lot of you that deal with this problem would think, oh, well, I missed the trade. I'm not going to be able to execute again. You need to never say that again, because all you need is price to retrace again, right? Set up the rules on the lower time frame yet again within the price swing in here, and then find your model and execute. As long as these levels up here still support the fact that price is still targeting like your higher time frame level, your model will continue to perform. Some models show up more than others. But this continuation variation and continuation perspective in a price leg for every single model and every single asset is so valuable in helping you combat the fact that you are fearful of missing a trade. You may not get the star-studded like high, right? Or the initial entry that was the perfect chef's kiss of your model. Okay, you may not be able to get that. But that doesn't mean you missed the trade. And that doesn't mean you need to spiral out of control with FOMO. Okay? It just simply means you now have to wait again for the rules to take place. Continue to use this as a supportive idea that you were in fact correct, that your draw on liquidity is going to be targeted. But then every time price hits a point where it retraces, inside that retracement, think about your model rules on the lower time frames. Sometimes it'll be able to be seen on the 1 minute, if this is like a 15-minute or a 1 hour framework, right? But maybe it's maybe this is on the 15-minute, right? And it's retracing, but to see this type of phenomenon, you got to go to the 1 minute, right? Maybe to see this, you have to go on the 30-second, right? we never know which time frame this is going to potentially form on. But for the most part, in a higher time frame, like 15-minute delivery lower, this type of thing will take place either on the 1 minute or sub 1 minute time frames. Okay, this continuation variation theory. Does this make sense? This is another one of those extremely powerful things that I teach students that fixes a lot of problems. And it takes time to practice it. Again, if you spend time here, I do this every day. I show this. Everything that I talk about, it's on full display. Every process I have, everything is on full display every single moment of every single day. Certain circumstances call for, different things, right? So maybe some things are sidelined until it's needed. But stuff like this, if I miss a move, this is why I didn't give a shit about missing this move today. Or sometimes, this same type of continuation idea could happen in terms of a reversal perspective. It hit an opposing PD array, like Khan said earlier, right? He assumed that this was going to go higher, right? But he got stopped out too early because he saw the first run and he took it because he's probably anxious, trying to get in, not trying to miss the retracement, and then he got stopped out, and that emotion was weaponized against you. And then price turned around again, and because you took that loss and were thinking however you were thinking, maybe in a negative way, it paralyzed you from seeing what was in front of you. But maybe you didn't realize that this would have been something reliable, and the fact that this was still valid, So yeah, even if something delivers like this, you can catch the retracement, but sometimes you're going to have to wait. You would prefer to see a stop hunt like this, right? And then price reject and shift market structure, set up your move. So again, it's just another situation where waiting is a very good thing to do. And this was inside of a macro, so this reversing to target the high, which I pointed out in the moment, like I did over here, it was reasonable for that to play out. I talked about how I was reluctant to take shorts, right? And this is the whole reason why I anticipated this type of stuff unfolding. Yeah, so does this continuation perspective make sense? Because maybe some of you guys haven't heard me talk about this. But yeah, this stuff is extremely, extremely powerful. Following rules makes it difficult to blow up accounts. Yeah, it does. And my rules are very, very particular. And all of my rules that I employ are all based on problems I've encountered and had to fix. And so that's how I'm able to, do my best to try to help you guys overcome the issues that you have. Because all of my rules, the things that I tell you to do, helped me get over a lot of the stuff that you guys struggle with. Or some of you guys struggle with. Some of you guys are doing phenomenal. There's only a couple little things here and there. Some of you guys are brand new. But again, every time I mention rules, think about how it can help you, because it is so, so important. All right? And rules are boring. These things are boring. They're not super fun, but, it is what it is. So what I just painted out here for, the continuation variation idea, that's essentially what I'm looking for in here, going into the rest of the session. But I'm probably not going to be here for the PM session. I do have to go see my little daughter. So again, I hope that you guys got value from today. Today was just one of those days of being patient, practicing discipline, and being okay with being calm. The PM session will most likely deliver some more volatility. We'll see. But this huge delivery happened, and then now we kind of paused in here. We're still inside this breaker. So until it violates that and submits to this being a potential market maker buy model, we'll continue to try to assume that this is looking to attack continued down delivery. We still have a little bit of this fair value gap on the Nasdaq. It could come and fill. Right, still a tiny, tiny portion left. I'd prefer, obviously, if we're going to stay bullish, for it not to do that, but we could just continue to accumulate in here for the next couple days if it truly wanted to. But buys are not going to be interesting until we get price to invalidate this breaker here and some of these levels that are above us. All right, so yeah, again, I hope you guys got value from today. We talked about a lot. Today was one of those days that we practiced patience, talked about a lot of problems that some students are having. I appreciate some of you guys that were new viewers today that hopped on. Hopefully you also got value, and hopefully we see you here a little bit more. And thank you guys as well for asking questions. I'm sure that some of the stuff you guys asked is going to for sure benefit somebody else that watches the video. So again, thank you for doing that. But yeah, with that being said, if you guys got any external questions or anything pops into your mind that you want to maybe reach out to me about, you can always hit me up in the comments. You can hit me up on Instagram as well, right? WMG Trading, plain spelling. Don't get fooled by scammers and idiots. And we could try our best to try to solve your problems. Right, so yeah, with that being said, we'll be live again on Sunday. Don't forget to like the video, subscribe to the channel if you've got value today and enjoy this content. And with that being said, I will catch you guys on Sunday for our weekly prep call and in our private group and in my free Discord channel, which all the links are down in the description if you want to become a part of those communities as well. All right. And no worries, Ziad. Appreciate you hopping on. And yeah, hopefully you guys have a good rest of your day. And let me know if you need anything. And I'll talk to you all next time.